Yo, I'm trying to hit him over the head with a micro real quick. Get up to $300. We're at 300 already. We're trying to get to like 4. Once I get to 4, I can scale into a mini contract. We're risking right here at 80. I'm actually gonna risk 125. Let me just put in 125 for my risk level, or whatever is above 85. So we'll do 140 right there. We're looking for this right here, and then the 1 minute 200 EMA. This is the 5 minute 200 EMA. We're looking for the 1 minute 200 EMA, which is right here at 57. 18. So I can see us pulling down to 20 real quick. And then I'll take profit or I'll lock in profit when we get down to 420. We should get 420. What is that? Let me hit the record on this real quick.
You know this.
What it do, dog? We up 45 right now. I'm gonna lock in 20 and just let it roll from here. Actually, I'm gonna lock in the blue line because I don't really need the extra cash. We're gonna let it roll to 10 o'clock. It's 55. We're gonna take $40 of that. We're up 294. That'll put us up $300 right there. 350. I'm gonna let it sit right here and chill, and we're gonna let this thing ride out. Now, what happened? Who am I talking to? Let me go back to the chat real quick.
It's a beautiful day in the
Morning,
neighborhood.
big
Beautiful
church.
day in
Yeah,
the...
hopefully some other people hop in here real quick and we can get some cash. Bro, 146. We taking that 100 of that. So we're at 140 on 2 micros, my boy. 150 on 2 micros, my boy. Let's go. We're gonna take 100 for sure.
Say the 15 seconds?
Huh? No, go, no, don't pull back. Okay, we'll take just 100. We'll go to just 100 just to make sure that they don't pull all the way back because it's the resistance. And they still gonna pull back to the resistance. Stay below the resistance. That 1 minute 200 EMA is strong, man.
Order filled.
I knew it. So we're at 396 for the day right now. Dang, I knew that 1 minute was gonna pop strong. I was hoping it would break down and go to the 5 minute, but the 1 minute was too strong. So what's going on, Chase? So let's talk about what happened today. So clear, you see I got it drawn out already. I'm pissed because I know it's gonna go lower. It's gonna go crazy to the 5 minutes. They hurt me, dog. They hurt me. They don't give me $100 and it's like over almost 2 now. I'm gonna do a single micro from 1820 limit order. 40. Sell 1. Right below the resistance area right here. And we'll sell 1 right there if it pushes back up. So what's going on is obviously they want to push this to 650. I don't know if they do it today, but we're getting damn close. We pushed up to 646.20 and we finally put off of that. But look at the wild thing though. Look at how I remember how I was telling you how the market has rules, right? We went up to, I
Yep.
tell y'all all the time, they go to like they go like the next 20 cent. They break through, break out, go to the next 20 cent. When they get into like the 70s and 80s like this on SPY, right? They break out, go to the next 20 cent. Look at where we hit exactly.
Where did we hit? Because I'm not able to see.
646.19, and then that's what caused the rejection that we just saw. So I'm actually gonna take my order and move it up to
It's always even numbers.
well, it's not just always even numbers because QQQ does odds and stuff like that. So each particular thing is different. But hard levels, 2 minutes until the market changes. Hard levels are set because human beings like consistency and perfection. We like perfection even though we can't attain perfection, right? So hard numbers are perfect. 50, 100, 20, 40. Those numbers are perfect to us. Right? We don't like 23, 27. Yeah. We like 23 because of Michael Jordan and stuff like that. So you got the 9 EMA, 23 EMA, etc. But when we trade, we like nice, even, or whole numbers. And what we're experiencing right now is hopefully this thing blasts up to about 24,100. I'm gonna go to 24,120 just in case it does violate that. And we get another play out of that. But just a couple of micros, bro. 150 at a time, eating off 2 micros. This should be 2 micros as well. 8. 2 micros. Now, 10 o'clock's about to go crazy, and I'm ready for it, man. I was hoping I could stay in that play. I should have went up to about 80 something. So it went down to about 175 and then started going back up. Got my right level before I select my trade. But yeah, they're looking for 650. We don't have any news today, so like I try to tell people, it's not about news. It's about market structure and market conditions. So if the conditions are well, like take for instance Amazon. What we're witnessing right now is an arms race. Hold on, let me close my door. So we're in the middle of a technological arms race right now. I'm gonna go ahead and get into 1 micro.
Order filled.
Go up to this right here for resistance. Down to this right here. I didn't mean to get into that, but okay, we're in it now. Lock in that $10 and keep it going from there. All right, up to 30. We're gonna lock in the 35.
Order filled.
Oh, okay, never mind. We got the 35 though. I dang sure didn't mean to have 4 right here. I meant to have 2 more on 198. But we're done. This should pull down to the 5-minute 200 EMA. We're at support right now. We're gonna see if we break support. And you see my support line being hit and being validated. We should be breaking that in a moment, going down towards the 5-minute 200 EMA. The market has to pull back, but we are in a technological arms race right now. This is not the .com bubble. AI is real. It is here, and it's a race for every country to get supremacy. And as that happens, all of the top 7 tech companies in the Mag 7 are going to go crazy. And right now, Amazon, what you see is doing well. Amazon's up a couple dollars, AMD's up a couple dollars, and Nvidia is actually struggling right now because AMD just released some new super processors, and Amazon has their it's like Uber but without a driver. So they have their automated Uber cars. They're in Vegas right now. My mom just took one. They're in San Francisco right now, and they're becoming extremely popular, especially with the rise of crime of Uber drivers. Amazon's got about, I think, 10,000 trucks right now that they're working on, and they've got a few on the road. So with the rise in crime of Uber and stuff like that, people are looking at these automated drivers as a safer alternative. So Amazon's going to start getting bigger and bigger and bigger. And we'll go take a look at Amazon stock as a whole right now. You can see that Amazon is down from its high about $4, but overall that massive shot in the arm for the market came there yesterday. You look at Nvidia did okay yesterday, but it wasn't the massive shot that came with like other stocks. Like Apple had a massive jump up, Tesla had a massive jump up. Nvidia's just kind of staggering right now because they don't have anything new coming out, but the next time they have earnings, they should have a nice bump from that to like the 200s and stuff. Microsoft.
Oh,
Microsoft is in on the game. Look at that massive move from Microsoft yesterday. Google is definitely in on the game, but Google is actually taking a hit for some other stuff that they're dealing with. But a couple of days, or last week, they had a nice little boost on Tuesday to take it to the upside. And you see Google pulling back right now, which is kind of keeping us in this little stagnant area. But they had a pop to open the market just like before. We're gonna go back to 350 yesterday so we can look at this and how it played into what's going on right now. So 1550 on yesterday. Go to the 1 second time frame.
oh, you literally can dial in like that?
Yeah.
That's cool. I didn't know that. I didn't know you can go to a specific time and date.
And then it's gonna load, and then boom. So look at what we did at 350 yesterday. We did what we're doing right now. We were going up, going up, going up, hit the high, pull it back, but then that allowed us to do what we're doing right now, which is take off from that point and then go all the way over
Fact.
here.
We need
So
to go low in order to go high.
yeah, the pullback
Understand?
is definitely necessary right now, and the problem is that for us, it ran all night. So we got to take
Yes.
advantage. We got to take advantage of all of this slow gaining overnight and stuff like that. That's ridiculous, dude. From all the way down here on the 12th to all the way up here, then stop, go to the afternoon shift, and we take off from there to go all the way up here some more. So all we're gonna do if we pull back is like the lowest we will go to like the $900 mark, the 23,900 mark. We can't pull back the whole move because we don't need to. We eventually need to come back to 824 to the 800, the 23,800.
No, it's crazy.
Look, we're
I
going for
literally
the
had a
5 minute.
video. I was sending you a video because I was in the play from last
What's up,
night, and
Steve
I'm
Nice?
like, we needed to pull back a little bit to go higher. So I'm
Okay.
thinking, okay, we bounce off of 15, we hit the 4 hour point of interest. We're shooting for the stars.
Yeah.
Man, that thing came down just near it, didn't tap it. It didn't. It went the other way, and I got out of it because I wasn't sure. I was like, you know what, I'll take this $50 loss because just in case we're, you know, it's faking us out or whatever. But I should have known that. Man, I look back, that thing was just off. It bounced off a 15-minute POI, and it hasn't looked back since.
Yeah. And what you're seeing right now is that we're struggling with support. All of this is acting as support, but this 5 minute 200 EMA is a bigger magnet than the support level. So once we crack that support, we should go down to the 5 minute. I made on the trade when the call first started, I made 150 off of 2 micros, and then I made another like 40 or whatever dollars. We're at 425 so far today. I'm just doing micros because the market's creating itself. I can't go in heavy. Now what I do have, like way up in the future, like so I had up there, I had 2 contracts at 500 if we ever hit the $500 mark, just in case it was like gonna go real crazy like that. But now that we're chilling and drawn towards this 200 EMA for the 5 minute, which sucks because, all right, I'll show you guys who just got in here where I was when I took the trade. I took this trade right here where this candle turns blue and Chase sees me like lower it to $100 so that I could stay in the play because I wanted, this would have been like 250. I was $100 is right here. It comes down to 150. It starts pulling back, so I go to 100, trying to stay in the play, and it went just like a 25 cents above where I was to knock me out of the play, and then of course ran down here, and now we're going for this 5 minute 200 EMA. But you see support is holding, and it forms like that every time when we get a hard level of support. Even these candle wicks, wick, because you're looking at a 5 minute thing or 1 minute thing. Even these candle wicks forming as support, this is a hard level of support here. It's supposed to push the market back up, but like I said, they want 650 real bad. I don't know if they're
Yeah.
trying to get like, inevitably it'll get to
Didn't
like
we
a
hit
thousand
like
dollars over the years, but they want 650
didn't we hit
bad.
like 649?
We hit 646.
Okay, I was about to say I could have sworn we hit
Pre
649.
Pre-market, we hit 645.70, and then after the market opened, we hit 646 today. Go to the 1 hour time frame. I was showing him that 1 second thing there. Refresh this. Yeah, we hit 646.20, and now we're down 70 cents from there. So anytime you're watching like your stocks, for my people who love to trade options, anytime you're watching your options and you're watching a play happen where you're like, when are we going to pull back? Like, we're going and going and going. It's always going to happen when we break through that next dollar amount and go to like the 20 cent area. So when you're in your 40s right here, you see that's the last line of support. When we break 40s, we're going to start to break down really aggressively towards the lower dollar, which will be like 644.90 and 644.80. And you see we've hit 645.15. Once we break that, look right there. Look at where the candle starts. It really starts to pop off right here. And this is how levels work for the stock market all the time. We push down, we break that 40. Look at how quickly we went to the 20s. It starts to struggle. Once you hit this blue line, it's supposed to break down for this area here. And inevitably, we're going to have to fill this gap up. You know, you guys who don't trade futures, you don't get to do all of this moving that happens overnight. So you get a gap up, you get a little move, and a lot of times what you should do is look for the next highest area. If we're high to start the day in the 80s or whatever of like SPY, just go to the next dollar amount where that'll be the ceiling, and then that'll push it down. And right now you're witnessing as you hit those 40s and you go below 40s, it starts to become a struggle to get back up there into that 50-60 range and starts to push down towards your support levels. We should be breaking support again, and that's the trick when you're looking at all of these trades. Like, you're like, oh crap, it's going back up, let me hop in. Never do that. Never hop in when it's going back up during a downtrend, because all it's doing is heading to resistance and breaking off from resistance and falling down. And if anybody wants to say something, feel free to chime in. Nobody's muted or whatever, you know. But you see the support here, bounce it up. Resistance there, push it down. Support here, bounce it up. Resistance there. This is what Chris calls decision making time. But we should be going towards this 5-minute 200 EMA and 23,950. That's the next level of support right here. This is what kicked it all off. All of this all night long that I sat here and watched. I was down $90, went down about $70, and then just kind of sat in it. And it's funny because accuracy doesn't matter at all. Time of day matters. Your risk management matters. My trades are very small losses, so that when I do have a positive trade, it doesn't take me long to go positive. And then on the other end of that, it's like a very aggressive push into the money making side of things. And I did a video earlier on scaling. I'll show you guys how scaling works for me. So this is a brilliant opportunity to explain how I scale. I'm going to go to a single screen. I only do it when we have a wider range. I wouldn't do it now. I'll just take like market orders or whatever. So if I'm doing a limit order and I get in right here at 60, all right, we go negative like $50 or whatever, comes back down, goes 60. Break down, we get to $100. At $100, I would add a contract, a micro. Okay, we get to $200. At $200, I would add my third micro. Okay, we get to $300. At $300, I would add my fourth micro. We get to $400. At $400, I add my fifth micro. Now what happens is it starts to, when you initially add the contract, it's going to pull the money back a little bit. So don't lock in too close to where the actual price is. You're going to be locking in the entire time. So I would be locking in right here at this level, which Chase saw me do before people came in here. I would lock in at this level, which Chase saw me do before people came in here. And then I lock in at that 150 point, right? From that point on, I'm adding a contract. We get to 125, I'm adding another contract. We get to 250, I'm adding another contract. We get to 375, I'm adding another contract, until we get to the point where we stop moving forward. But by then, you've added so much extra money to your trades off of each of these pullbacks. You see, we pull back to right here, you add a contract. Pull back again, we just broke the support level. This is a magnet. This 5-minute 200 EMA is a magnet. It wants to get there. It wants to get there, and it borderline has to get there. So once we break the 6 cents over here on SPY, you see my support line right there. See, it's bouncing off the support line. These 4-hour time frame points of interest, they're solid. They're solid. They're going to react every single time. But once you break them, you get the flush out like that. We go to the 90s. We go to the 80s. We're trying to get back down here. We're trying to start filling this gap in. You know, they're like, all right, cool. We can't go any higher. Let's at least try to fill the gaps then. And then look at that. You break here. We're all the way down here at the next level of support. So we reacted off the next level of support. Bodies of the candles are the true levels. That's why we're reacting at this level of 80 right here. But like I was telling Chase, human beings like even numbers. We like even numbers and we like whole numbers. We like to see 50. We like to see 100. We like to see 80. So you'll start seeing like at 90 and 80 and 20 and 50 and all of these even numbers, we have these strong reactions. Right here at 80, we get a strong reaction to push back up there. But don't buy to the upside because we're in a down trend. And we need to get down here. I want to see what happens when we reach this point. And just as a test, I'm going to reduce my risk to $50. And I'm going to do a single micro on that to see how we react off of that. So that level is 60. I'm going to do 60. 9, 60, 60. And we're going to do 1. He going to do 1. Oh, this is NQ screen. All right, we're going to also go over to the micro screen because I'm on the NQ screen right now. Big dog screen. I ain't on the big dog status today. So we're going to sit here. We're going to see how this reacts. We have all of this room to the downside. We're risking $50. That's okay. I'm at 425 right now. I want to see how this 5-minute time frame reacts. The 15-minute time frame is all the way down here. Now, this is the gap fill. This 15-minute 200 EMA is at the gap fill. You see that it's above the candle wick that wicked up. You see the level right here. So this is at the gap fill. We get down there. We will have filled the gap. Let's go to the 5-minute, the 1-minute. So you see the 1 minute's right down here at 43. This is where the market would try to get to fill the gap. We slide left. Look at that. It's right there, just above the gap. So the 200 EMAs do work a little different for options than they do for us in futures. But for futures, the 200 EMAs are very, very clean. And we're just going to sit. We're going to wait. We're at the 5-minute. Look at it acting like a magnet. Look at it acting like a magnet. It's coming down. It's like, come here. Get down here. Come on, get some of that money they trying to get you. We're going to see if it reacts off of this 60 or if it goes down to the 40. Like I said, we're risking just $50, making whatever we make off of it. But this is a strong level of support. It may bounce right here, actually, just above it. But that's fine. We're at the level that we're supposed to be based off of the 5-minute 200 EMA and patience. And I'm recording this so that I can put it up later on for you guys. But does anyone have any questions while we're chilling here? Starters, is anyone muted is the question. Chase, can you talk or no?
Yep.
Were you muted?
Yeah, I was muted for a little bit. I had to get my
No. Is it because of me or is it because of you did it?
No, I muted myself. I stopped
okay.
in the gas station.
All right. Let's go back to the trading screen. You see how that support happened right there? Boom, hit support, go up some more. Let's see if we can get all the way down to the 200. That's the goal, to break this 16 cents over here. Come on down to this level right here. 66, 80, and 71. And you see the support line holding still, pushing the market back up. Beautiful 4-hour support line. If you go over the 4-hour time frame. And it's funny because like even with no data, I still know where to put my lines. It's just based off of historical data. So Chase and I were talking about this morning. He's like, he wouldn't trade it because there's no information. That's true. There's no information. But we have historical information to show how the market acts when we do these things. If you go back to prior days where we broke, we did the exact same style of trading, almost identical to what's going on right now. Boom, going up, put down right there, bunch of support, put down a little lower, allowed us to go a little higher. Same exact type of trading day yesterday as what we're doing at this very moment. We need to break this and go down a little lower. We need to hit this 200 EMA for your boy to get some money. And once I hit the 200 EMA, my target will be the resistance right here that we're currently using as support. Yeah, I've been up since about 3 o'clock in the morning, just analyzing what's going down.
You're welcome, sir.
Look at those good manners.
Like, I gotta look right.
What up,
Vibes.
Sebastian?
What's going on, boy?
You gonna be at the event?
What event? For Chris?
Yeah.
I don't think I'm gonna make this one.
Ah, damn.
Yeah, I don't think I'm gonna
Thought I
make
was
this.
gonna see you.
I'll go to the next one for sure though. It's like the end of this month, right?
It's Friday,
Oh,
Friday and Saturday.
definitely not gonna make Friday and Saturday. Yeah, nah, I'll definitely be at the next one though. This one, August is a bad time. But what's going on, man? How's your trading going?
I ain't really traded today. I've been kind of busy,
I mean,
and it was at all time highs.
as a whole, how's your trading going? Not today.
It's going a little bit better. I switched over to ES instead of NQ.
Yeah.
I'm still adapting. It doesn't move exactly how NQ moves.
No, but it is much safer and it does make good money. You know, y'all remember I was stuck over there for a long time, so it's a good futures. I was about
Yeah, I think I'm messed up with my entries. Like NQ, like I don't know. I feel like NQ pull back more. I'll be
yeah.
waiting for a pullback on ES and it doesn't happen. It'll just start running.
1018. Yeah, man. No, it definitely not. You got to think it's moving dollars versus tens of dollars and hundreds of dollars over here. Like every dollar that they get on the S&P 500 SPY, ES gets 10. So they move in like $10 increments for a day for like an hour or whatever, while we move in like $100 for an hour. You got to think we just ripped from 60 to like 80, which is $80 in like 18 minutes.
Oh damn.
So we move over here in NQ, but NQ's about levels. If you can get your levels tight, you see how the support and everything reacts right there. If you can get your levels tight, you're gonna kill it in NQ. You got to know that 4 hour time frame. You have to be very, very intimate with that 4 hour time frame.
Yeah. What up, Nick?
What up, Chase?
So like Sebastian is saying too, bro, and I think me and you should like, and then anybody who want to join, but I know because the conversation we had, and you're like, you want to be a scalper because you like getting in and out. Sebastian is like, he's not a, what do you call yourself, a high level
High
market,
level
and
stock market analyst.
he's got the tools that you need, bro. Like as well as Joe too. You know what I mean? Joe is a Joe is actually anybody who knows how to trade with market structure knows how to scalp and when to get in and out of a play before we hit that ceiling or we hit that floor. So there's a video, that Davon dropped, and also I have another video, which we'll call it, that I've came across myself, and it's about fractals, but basically it'll help you as a scalper because what
Send me the
essentially
video
what
when you find it.
I all right, I got you, bro. Because what Sebastian is doing is very high level. Like them blue lines and certain things that he has marked up on his chart is definitely for a fractal trader. Where people like myself is, I'm waiting on a different setup, and I'm looking to get $1,500. Sebastian could hit that just doing fractals. You know what I mean? So it's really nothing really changes because market structure is always sound, but the actual level of perception that you have to have in order to learn when candles are validating each other, when they're going to reject off each other, when they're going to support each other is very key. So I got some heat, and we'll study all together. You know what I'm saying? So anybody who's in here that wants to join too.
Okay. So real quick,
Why do people want to? I can't stand being in a Mustang sometimes because people just want to. Why are you trying to race me?
who put Chevys like this? That boy said, "Get on, Mustang. You out there fishtailing."
I know they probably be smoking you.
Nah, there's no way. Listen. I don't care if you do because I ain't here to race.
But this right here, this was my prior level of supply zone, so that becomes our demand zone for the day. And then this right here is where I want to get into the next trade in between these two candles that just broke. So I actually lowered my level to below the 5-minute 200 EMA. It's not the most important thing is that it hits here and that we react off of it. It's important that I'm at the proper level. So you go back, you start to look, you see all that consolidation and stuff. You're like, okay, cool, that's where we broke out from. But yeah, fractal trading, all the terms and everything that everyone calls it, sure, I'm sure I'm doing some of that stuff, right? I focus very heavily on the market structure and what made the market structure. And so I started looking at the 4 hour time frame and all the how all the candles move just for like months, man. For like months at a time, I was like, look at this and just backtrack. And that's where all these old lines come from. Like I can take them off or whatever. And you still see it. You still see the 200 EMA is still very important on the 4 hour. The 1 hour, the same thing. You'll still see, like, look at that. We literally touched the 200 EMA for the 1 hour, and the market goes crazy. When these things happen, that's what you want to take note of. Look at this right here. We were struggling to get above the 200 EMA. We get there, we pull back, we get through. Market never comes back. But inevitably, we will go back to it. And the next time we go back, you look for an even bigger move. Market pulls back, hits the 1 hour 200 EMA. What day was this? August 7th. And we just popped off. Now, notice the 200 EMA is transitioning up to this level right here. 600 is now our 200 EMA point for the 1 hour. This is now the level that we fall to when we have a big fall. So keep your eyes peeled for no matter what high we take. No matter what high we take, this is where we want to come back to right here. So for the day that comes where like the market's crashing out seemingly like this right here, and you're like, where we going, or week, however long it
Literally
takes.
tap that thing too.
Yeah,
That's crazy.
all the time, dude. All the time. Same thing when we were going up. We tap right there going down, massive breakout. Go back up to it, struggle to get, above it, back above this area right here. Pull it back. But you know that once you get a full candle up to this level right here, you know it's over with. And then come back down, get a nice little tap, and set you up to go to the next level. And that 1 hour 200 EMA becomes a very pivotal point of trading days. Days where we have massive moves and massive falls back to back to back. That 1 hour 200 EMA is very important. But this level, this beautiful level right here that was support, now that was resistance, this is now support. That's where we fall to when we finally have that big old sell-off. Come on, tap me and tap your boy in. I want to be in a trade.
Hear me knocking? Let me in.
But they're struggling right now with pushing it back up. It's going to go back up, but it has to come and start to fill these gaps and stuff like that we form. We're going to be dead even with the entry in a minute. If we get dead even with this entry and it like hits a hard fall, I will cancel my order because they might look to gap fill now at 10:30 because we are 6 minutes away from 10:30. Where's the 15 minutes? The 15 minutes is in the gap. We'll keep this for now. I'll snag a little bit of profit, and then we'll move on down to the 15-minute 200 EMA. But massive pullback. Got the little T-shape there for people who like looking at patterns. I don't like patterns. I think patterns give people false hope. Patterns make people believe that things happen all the time the exact same way. If you see a pattern, it doesn't actually happen like that. There are things that have to happen for the market to move. Like yesterday when we made that beautiful, oh my gosh, it was gorgeous. That 1 hour in shape right here. Oh, earlier. This was amazing right here. This was $1,000 day, so easy.
What you mean an end shape? I never heard of an end shape.
If I put on the 15 minutes, you'll see it. But on the 1 hour, this massive up, down, and up, it's an in. You draw an in.
Okay.
Like that, right?
And that big red candle acts as support.
You see, it's an in shape.
Or y'all case an order block.
Boop, boop. It's always an in shape. It looks like 3 big candles on the hourly, but it's really an in. It's up straight, down, and then a breakout. So when you get that, you do normally get a breakout, but the same thing happens to the downside. But that doesn't happen every single time because, say for instance, this level right here was the hard ceiling. We didn't have a hard ceiling. We were making new highs, so we didn't have a hard ceiling to go off of yesterday. But if this level right here was a hard ceiling, you would actually break down and form an M and then fall even lower. And that's why patterns are kind of tricky, and you should really just know market structure over knowing patterns. Tap me into this play. It's going to go to my initial spot that I was at and bounce off of that. Come on. I knew it. It's at my initial spot, and it's gonna bounce off my initial spot. No, break the initial spot and just tap me in real quick.
Dang, it's gonna bounce up without you. That'd be crazy.
We're at 37. It's gonna come down still. It should come down to 50. We'll stay at 53. Just gonna chill and wait. chill and wait, and then what I'm looking for is the 9 EMA right here. Get about 40.
That's your target.
Yeah, to get out if I can get into it. But like I said, we got to be very careful here because we are starting to gap fill. Hopefully this stays at support, and then that'll get me into my trade. But if we break down below that, I'll eat whatever the little bit of loss is. Damn, we tapped that 200. It's so strong. The 200 EMA is so strong. We need to wick it out. I knew it. I should have stayed where I was at 60. God darn it. I psyched myself out. I psyched myself out looking at the candles and seeing the extra support down here. But we're right both ways. Either way, it's going to hit both sides. But yeah, that's a normal reaction off the 200 EMA. It's like a magnet. Market has to go there. We tap it. We react off of it. And you see really quickly, you get a $20 move. And it's like, boom. $20 off of that. But we have fallen now $100 in just 30 minutes, less than 30 minutes. That's the beauty of the stock market. Less than 30 minutes, well, 35 minutes. Less than 30 minutes overall, we've fallen $100. Come get your boy, but don't break out and go crazy. Me and the Queen have a very beautiful relationship. We understand one another. We communicate well. Sometimes you have to yell at me because I'm a knucklehead, but we good. Here we go. Here we go. Here we go. Here we go. Here we go.
Order filled.
We in there. We're risking $50.
You went with one mini or one micro?
One micro. I'm up 425. I'm not gonna risk any of my money, dude. The key is to, you see us going back above the 5 or whatever. The key is to get as many $200 days as you can. And this is, if I get the $500, I've got 2 of those days wrapped up. This is what I want, $75. This is what I'll start locking in at 25. And we're gonna draw down because we're at 644.20. So we should pull it down to the other support level and bounce off of that. Hopefully we don't, and we just keep going from here, and that'd be great. But we are starting to weaken in the market, and we are at 644.20. Let me put this back where it's supposed to be. We're at 644.44. Yeah, on this, by the way, you cannot let these go. If you let them go when you're negative or whatever, it will just automatically stop the order.
Tell me about it.
Yeah.
Like, and it's me too. It's so sensitive. Like, I literally, my finger was so strong because I was holding on to my mouse. I'm like, yo, this thing is very sensitive. If you do let it go, it cancels the entire trade.
Dude, my finger was hurting so bad on my phone the other day, holding that darn thing.
Yo, I don't know what type of technology they have, but it is. Sheesh. What's up, Gary? HP.
Oh, what's up? What's up? I'm sorry, I
Yeah.
thought I was muted.
Nah, yeah. Well, yeah.
You been muted, G. I ain't heard you the whole time I've been on here.
Sivas, Daniel,
Welcome everybody, welcome. I just wanted to get on and
Adosi.
share some moves or whatever, share some conversation about this market and what's going on. You know, obviously they want to get to
And-
650 and stuff like that. We're taking a little play right here from support to see if we can get ourselves a few dollars. Clearly I could lock in a few bucks or whatever, but I want to see us move back up this candle. If not, I'll eat the $50 loss and take it from there.
What's crazy is you don't ever live trade in front of us.
A couple of times here and there. I don't like live trading because I feel like I change my strategy to suit entertaining
Everyone else.
No,
Yep.
to entertain, to make sure that something happens. This was happening the way that I felt it should happen, and we had actually talked it through before the trade happened. So now, at this point, I go lock in the 200 EMA, and then we take it from there. So we got our 1250. If it wicks down to the 200 EMA, it is what it is. What I want is the full body of this candle at $40 and to inevitably get up to the $75 mark right here. We are struggling because
That's
we're in the
fractal
20s.
trading right there.
The 20s are going to push us down really aggressively. We need to get back to the 40s. Back to the 40s will put us right here at the $40 mark, the $50 mark, and the $75 mark. I want to get to the 9 EMA. We're weak right now. I will get
Order
$12
filled.
no matter what. That's fine. Let's see if it pushes even lower. But no matter what, I'm taking a little bit of money. If I see like it get above a certain point that I want it, I'm going to take some of the money. And all that money adds up to you being a successful trader. I don't care if you're making $5, you're making $8, you're making $2 a damn day. you're successful if you're making money from the market. We are up to 436 right now, off of just a single micro and a couple of micros here and there. We took the initial big plays. Like, I know when the big plays are coming, and I'll put in my 2, 3, 4 micros or whatever and take the big plays. But we're drawing down. Like I said, we have to get to that 88, and we're gonna fill this gap. So I'll wait till we finish gap filling before I take another trade or whatever.
Ooh, that look like the Matrix, boy.
Oh yeah, you get used to it.
Don't do that. Don't do that.
It
Yeah, I
it
feel like I
should
was
be
catching a slight seizure.
it should be like this on this screen too. I gotta go back a bunch. And there we go. Should be like this on this screen too, but I go the 5-minute time frame. I took it off. And then that's the downside, right? Is, like I said, we have to hit certain levels. Once you hit certain levels, you want to be in like right here at 50 or whatever. You want to hit certain levels, and from there it's going to go back up and do what it's supposed to do. But we haven't gap filled yet. So once we gap fill, things will start to normalize. And gap filling is almost all the way down here at the demand zone, which used to be my supply zone. And
That's what I'm waiting on.
you see us gap filling over here. So we've created a high. The high is 646.20. And why I use SPY? I'll answer that question. If you guys didn't notice earlier, SPY was going crazy and QQQ was not. QQQ was on a delay. SPY is the heart of the market. When it moves, the rest of the market moves. So I use SPY as, one, it's very, very, very easy to read. And then two, it's an indicator as to what's going to happen with the rest of the market, what's going to happen with Tesla, Meta, etc. When you start to see certain aspects struggle, you can instantly go look at your wish list. You don't even have to look at your whatever the hell this thing is called. You don't even have to go to each individual stock or have each individual stock put up. Just watch what's going on in the market, go over there, and you can correlate it to what's going on. You see us gaining a little bit over here on Nvidia, struggling, but you see us pulling back on Meta, and that's why the market's drawing down. Meta's having a stronger pull right now than this little couple of cents that Nvidia's getting, so we're going to continue to pull it down and gap fill. But the gap fill is the completely natural process that the market has to take. If you guys pop off, or if we go all night long and we're running and running and running and the market pops up, don't worry. Find out where the high of the day is. Take your play from the high of day. So we ran from 9:30 until 9:50. At 9:50, they told you, like, hey, that's it. That's all we can do. 9:55, they were like, listen, we warned you. Right here, when we started getting that 15 minutes where we just couldn't get above that point, you can just place a trade to the downside. Keep it super simple. You get this big old candle right here that pulls back to support, goes back to resistance, pulls back to the next level of support, goes back to resistance again, pulls down to the next level of support, then finally breaks out and starts the gap fill. And you get yourself, it's 10:30 now, you get yourself a $2 move. And then of course, if you're doing it with 0 DTE, that's going to be a lot of money versus if you're doing it with the 2-week contracts, stuff like that. If you're doing it with 2-week contracts, you might as well be swing trading. You know, if you're doing like 3-day contracts and below, you can do this the same day trading. But if you're doing anything below that, swing overnight and do like swing trading and stuff like that long term. But we're drawing down. We draw down to the 5 minutes. You see the 5 minute now acting as resistance, pushing us a little bit lower as we gap fill. Look at that beautiful breakout to the downside. So I got my $12, nice and safe. You know, I knew the reaction was going to come at 50. Took the reaction to the 68 or whatever, and then locked in for the $12. Took my $12, and now it's going from there. And I can analyze the market going forward with all of the historical data from this morning at 3 o'clock in the morning when I was up reading the market. So I get up at different times. I just wake up now, so it's not like an alarm or anything like that. I just wake up at these times. Like, you know, I called Chase yesterday, super excited at 8:30, and Chase was asleep. You know, I forget people sleep, and I'm like, Chase, get up right now. And Chase is like, yo, he called me. He's like, I ran to the computer. This right here, I got in at I think I got a video for it. I have to find the video. I did a video yesterday where I got into this play at 8:25, and then it goes super duper crazy. I'll put on the 1 second time frame, and 1 second. There we go. And then you can type in where you want to go. So we're gonna go 0830. And then we're gonna go yesterday. To let it load a couple of seconds. Booyah. So I'm in right here. I'm in right above the 200 EMA. Is my play. 8:30 hits and it rockets up. 1 second, 2 seconds, 3 seconds, 4 seconds, and right here, this red candle was at about $1,200. I locked in the 1,200, so it pulled back and knocked me out of the trade. But then proceeded to run like crazy. This is 1 second, guys. That's what people don't understand about 8:30 in the morning. This is 1 second, 2 second, 3 second, 4, 5, 6, 7, 8 seconds, and you're over $3,000. There is a technique to this, and I am not going to teach that right now because I don't know if Davon wants y'all getting into stuff like that, but there's a technique to it, and it's using this consolidating area as your support and resistance. There are days when it goes down, and there are days when it goes up, and there are also days where it pulls back very aggressively and then goes up. I understand how to catch all of them now from a whole lot of practice. And when I say a whole lot of practice, you need at least a few hundred hours in with just watching and paper trading these 8:30 plays. You know, because initially it's a guess, and then you start to figure out that it's not a guess. You know what you're doing. But crazy money in no time. 7 seconds from 23,662 to 23,747. $100 in 7 seconds. And we're doing similar things today, but it's slower. You know, it's the same thing happens throughout the day, just faster or slower. My goal is to hit $500. I'm technically done for the day. I'm just in here with you guys. My goal was to hit $500 because that's 2 of the trading day goals. The goal is really $200 a day, but every time you get $200, it goes towards, you know, you getting your payout or you're getting towards your permanent or whatever. I am at tomorrow's my payday for this account, so I need another $200 day tomorrow. And then at the end of the day in the market, I can request half of whatever my balance is. You know, hopefully tomorrow I'll have like, you know, $10,000 or something like that in there, and I can request 5K. With scaling, this is how their scaling works for Top Step. So this is a 150K account. I can start with 3 contracts. I never start my first day on an account trading minis for the most part. I will trade 4 micros or 2 micros until I get to like 60, 70 bucks. I need a buffer in there in order for me to take a trade. I'll go one mini, and then I'll set my stop loss at about 250, and if I lose that 250, then I'll just go off minis until I get that 250 back. But if it's a really good day, then I'll start with 1 mini. If it's an uncertain day, kind of like today is right now, I'll stick to micros. And it's just a feel for the market. I knew this was coming. You know, me and Chase been talking about this all morning. I'm like, they want 645, 646. They hit that 646.20. They're going to come down off of that. And now we're gap filling. It's taking a really long time to do, but we're filling the gaps and moving our way down. As far as how I like to take my trades, you guys see, I pick a level. I sit at that level. I don't care what happens in the market. I don't care if it's running up and down, and I can jump in, and I could have made $100 or $500. I don't change where I want to enter because I've done research on that point. My research is geared towards one single point. If it violates that point, it violates that point. If it hits that point and reacts the way that I want it to react, then I'm right and I make money off of it, right? And then my cushion is made so that I can breathe. Like you saw the $50 or whatever, we went down to -8, we went to positive 25, we've been struggling ever since then. But it's based off of looking at this over here and going, okay, we keep hitting this level right here. I want to be at 50 to make sure that I get into the play. I was initially at 60. I knew that it would run down to about 45 or whatever. So I say, you know what? Let me just take 50. I'll break it down the middle. 60, 45, 50. We'll go with the 50. And then take it from there. And I just sit and I wait. And it may take 30 minutes. It may take... Yesterday, when I got the 9/11, it took to 4 o'clock in the afternoon to get my trade to go off. All day, all of this movement, all day long, and it finally hits my trade at 4 o'clock, and then I only have 10 minutes to complete the trade. Luckily for me, the trade took about 15 seconds, and by waiting on my trades to happen at areas of strong support and strong resistance, I get instant reactions. It's not like I'm in a trade and I have drawdown and I'm negative for a little while. My trades go positive immediately because I'm only taking them from strong areas of support, strong areas of resistance. I don't take none of this. I might play in here once in a while if I'm just trying to like grab like $100 for an eval, but when I'm in cash, I'm locked into how and what is going to make me money. I want every single day to be as green as possible. If I can get every day green, fantastic. Like I say, it's not about accuracy though. It's about risk management and understanding the overall desire of the market. Billionaires can only move money at certain times. This ain't one of them times. Up here was when a billionaire can move money. That's when you get these big moves. Way back at 8:30 is when billionaires dump their money. 10 o'clock, 9 o'clock, 9:30, all those times, all these time frames that make up these cool little shapes and stuff that we love. These M's and these N's, if you put on the 15 minutes, an N. I call this an N shape. We go up, we pull back down to the support, we go up, we break out. These are this and the V. When the market just falls and falls and falls and then goes like the entire distance back up, those are my two favorite types of trading days. All of this other stuff in between that, I don't really mess with it. That's why I'm a morning trader. I like the momentum of the morning. It doesn't matter what time you trade. Don't be afraid to trade 8:30. Don't be afraid to trade 9:30. But have your understanding down. Yesterday was a news day. On a news day, you know 8:30 is going to pop like crazy like it did. This right here indicates what type of news it is. We had CPI. That's your consumer price index. What the consumer price index monitors is the overall economy and how interest rates are affecting the economy. Yesterday we had what's called core consumer price index. We actually had all three. We had core, we had regular CPI, which is consumer price index. The consumer price index overall is why the market kind of ran a little bit more. It looks at inflation with energy and food. This is inflation before energy and food, the core CPI at 8:30. And because that was really good, we popped off. Because the other information wasn't as great, we pulled back. And because the third information was good, we went ahead and took off for the rest of the day. So it all balanced out to being an overall very good day, which allowed us to run higher. But all they're looking at when they look at CPI and you see that come up there is how is interest rates, or how are interest rates affecting the overall economy? And right now it's a solid economy. As Donald Trump would say, it's the greatest and best time to be investing in the stock market. This is the best America that it's ever been. Okay, and it's only going to get higher. And in that case, he's not lying at all. The market is only going to go higher. It does it every single year. And you have to understand that it's market structure. It's not Donald Trump going in there and saying tariffs. It's not CPI saying, that, hey, the Fed is doing well, we're going to do interest rate cuts. All that matters for very specific times, but overall, the heart of the market is good, so the market's good. The S&P is good, so we're good. Same thing for any prior day to that. This day wasn't so great. We pulled down, but guess what? You get a little bit of news right there. You get your China tariffs deadline, had a high impact on the market. We pulled down, but it's all figured in already. The market is already set in stone. We only pulled down to exactly where we were supposed to pull down to. That was just consolidation to this point right here to bring us back to that level so that we can break off for another day. So when people start feeling that fear and stuff in the market, the news has an effect. It does. 100% has an effect. But the news is not the stock market. The stock market's moves are set in stone. They're based off of interest rates. They're based off of the overall global economy. But it's based off of how companies are doing. There's 7 companies that you need to know about. And they are as follows: Nvidia, Apple, Tesla, Meta, Microsoft, Google, and Amazon. Netflix is a big player, but it's still not one of the big dogs yet, and Netflix is at $1,200. AMD is becoming a bigger player, but it's not there yet. You learn about these 7 stocks, these magnificent 7, and you're good. You learn what affects them. If Elon is saying some crazy stuff in the news and they're about to drop 10 points, lock in on that. That's going to affect the market. You see what we're doing right now. We're gap filling. It's moving slow, but we're filling the gap. We're going to get to this 1 minute 200 EMA, and then we're inevitably trying to touch about right here at 42. It's slow, but it's happening. And then that's why, another reason why I don't trade all different types of movements. I like fast, steady, hard moving trades. I want my trade to either lose immediately or win immediately. That aspect of me as a scalper. Now I'll have a setup where it'll go for like $2,000-$3,000 or something like that. Once I build this account past $5,000, I'll be able to take those types of setups. But my initial goal is very simple. Just do what they're asking. Their payout policy is pretty set in stone. That's your goal number 1. Me and Chase had to talk about this just yesterday. He was like, I'm going for 150. I said, nah, go for 2, because 2 is what they're asking you for. Now on the new accounts, it's 150. On the legacy accounts, which they call it legacy accounts, the old dashboard that I'm in right now, I have to get $200 a day. If you open it up on the new account, you have to get a winning day of $150 a day. 5 days of $150, you can now ask for 50% of your balance. So if your 5 days you make $2,000, $1,000, you can be like, hey, can I get 500? Hey, can I get 1,000? And they will give it to you. They don't have any other rules other than not hitting your drawdown. You can trade news, which I did yesterday. You can trade any time frame. You can windfall. I don't suggest windfalling. Oh, we're doing it! We're doing it! We're gap filling! Sorry, that excites me. We're gap filling right now. You hear it? You hear those alerts going off. We're gap filling. Look at that. We're going to hit the support right here at 22. Notice how we struggled to get back up to the top of this candle. When you know you can't get to the top of that candle, you're hitting the 90 EMA resistance, and you get back below the 200, you can go even further. But look at how we stopped. I just explained this. We go down to that 70 cents, 60 cents, 80 cent point, and we bounce almost every time. And there are just things that have to happen. But once we break them 60s, oh, we're coming down here to fill this gap. Look, it's taken about 48 minutes, 50 minutes, but it's happening. You got all the way to 11 o'clock to fill this. And then 11 o'clock is the next part of the story. So the stock market works in stories. For us in futures, the story never ends. It's a never-ending story. But for options, it starts with your 9:30 open. It completes what happens overnight. So 9:30 completes what was happening overnight. If overnight we were drawing up, 9:30 to 10 will finish that. 10 o'clock to 11:30 will start the next chapter of the story. 11:30 will set you up for noon, and then it's from 11:30 until 1 o'clock, and then 1 o'clock to the end of the market's the third chapter. The final chapter that only a few of us play in is called Power Hour, but really specifically the time from 3:30 to 4 o'clock in the afternoon. That is the final. That's a little closing remarks on the day, and that sets you up for what's going to happen the next day. But you see right here, 350 came down there, popped off, went on up, market trended up. Day starts, we finish what it started. We start off by jumping up, pulling back, and doing the same thing. We did the exact same thing right here. We jumped up, we pulled back, and then we went on. And then you ended the day with a red candle. You ended the beginning of the day with a red candle, and it started the trend down. That's as simple as market structure gets, honestly. Market structure is a set in stone set of rules that the market has to follow in order for it to be valid. All of this stuff over here, oh, we hit the support level right there and everything, so that's dope. All of this stuff that happens to the left and the right is historical data. It's all very helpful, but the market's set in stone. Even this right here, double lines represent a strong level of support. Double line hit there, double line hit here, went up. Manipulations are these giant candle wicks. Eventually we will feel the manipulation, but that comes later on when we have those massive falls that you guys see. That's when we have those big falls, that's when you see these massive manipulations be filled. Run on up there. 8:30 gave us a preview of what was going to happen in the market. We was about to go all the way up, and we did just that. We pulled back to give the retail traders an opportunity to get in, came all the way to support in the double line, and then we took off from there. It's fairly easy with enough practice to read this thing super duper accurate. It takes minimum 30 minutes a day for 90 days, and that'll give you a 40-hour work week in the market. And when I say 30 minutes a day, I mean uninterrupted while the market is live, watching how it works and placing maybe paper trades or whatever the case is, but more importantly, watching how the flow of the market is. Learn the flow of the market. Learn how the market actually moves minute to minute, second to second, hour to hour. Everything has a slight difference to it, but it does generally the same thing all the time. We hit the support level right here on the 30-minute time frame. We're looking to break down into this gap right here and fill to this area there, which is we used to be the supply zone, now the demand zone. You know, but we got room to go higher. They want that 650 bad, but Nvidia's struggling right now. Netflix ain't doing much of anything but struggling, and Meta's pulling back. Meta had a nice little start to its day, but now it's time to come on down. Come on down. Beautiful jump up from Meta, doing the exact same thing. So Meta's the one that's kind of ruling the market right now. They're going up, they're coming down, they're going up. Notice that we're getting higher lows as it goes on. The candle wicks count is the highs. We're getting higher lows. Get below that 200 EMA, that's when the struggle starts. When you get below these 200 EMAs, that is when the struggle starts. You get above it, that's when all that victory starts to go to the upside. But when you get below, boom, get back up to it, higher low, higher low. We're gonna form another higher low. We're breaking the lows. Like the support level was here before. We broke the support level over here on Meta. So Meta's going to its next higher low. Every stock is readable the same. Get below this level here, which is the 5 minute for like Meta. Higher low, going on down. Now they're at support over here on Tesla though. Tesla's good. Tesla's still up for the day because Tesla came from way down here. So Tesla's still up a couple dollars for the day. But they pulled back from like 49, so $7. Meta just came through that. Microsoft is doing a similar thing, but Microsoft's stock is still slightly different from the other guys. They went up, they pulled down, and now they're trending up but pulling down to the same type of a situation. But their support level is set in stone. It's very strong. Goosh, good old Goosh. Goosh has just been struggling. They're just not like the others right now. You know, but that's what's going on. What's going on with the companies with the layoffs and stuff like that. That has to do with how the company's being handled right now, not so much what's going on in the market. It's doing the complete inverse of what's going on in the other stocks. Big Amazon went on up there, and now it's coming on down, but its support is strong, just like all the other guys. Notice those 200 EMAs for these stocks work very well. So for your tech stocks, they work very well. The 1 minute, the 5 minute would be the next level down here. That's the gap fill for them, where they gapped up from. It's right around the 5 minutes, so that would be nice. Same thing when you're looking at AMD. AMD's gap fill is right at the 5 minutes. That's a massive gap fill too. That is if you got that from the top, that's a great play. That is a $10 play. I know a lot of people really like AMD. Gap fill down here for Google. Microsoft, gap fill down there. Gap fill is actually right here for Microsoft. It's not at the 5 minute. For Meta, pulling on down. Meta's already technically filled their gap. They're just at this point falling. Big Tesla. They're looking for this. And of course, the biggest of big dogs, Apple said they doing what they want to do today. You ain't telling me nothing. Oh, wait till they get their money right. But we are still slowly doing what we're supposed to do, filling gaps. You know, but how's everybody doing on their trading journey, man? Chime in and talk to your boy. All right, good answers. Sound good. Yeah. Von Burgundy, hi-yo. First NQ win, fire, dope. That's what's up. Congratulations. Somebody's rolling this morning. 1 hour, 4 hour time frame, 15-minute time frame. I'm looking at the Discord.
Hey, Sebastian, real quick, what do you use to back test? What platform?
I don't anymore. I just be live trading. I mean, I trade live in the market.
So you just do a lot of...
It's like mental work, really. It came really early on. You gotta think, I'm 3 years in. I've been back testing from the beginning. Now I don't back test. I just understand what's supposed to happen, and I use the live market as my training ground. So if I'm unsure, micros. If I'm absolutely sure, minis. But
Okay.
no matter, because it doesn't change. Like once you get a feel for it, the market really doesn't change. It's just that initial couple of years of learning and understanding that gap of knowledge that we just don't have is what makes it so hard. But when you start to see the market really just does the same stuff in slightly different ways all the time, the back testing is only for if I'm trying to make like really big trades, or I'm trying to see if I could have got like 50K on this or 100K on this. So like you'll see me go back in my videos and I'll use TradingView to like paper trade and look at what happened with like the trading day and stuff like that. But that to me is not entirely back testing. That's just seeing how much money I could have made on in a particular situation. Like coming in here Had I stayed in my initial trade from this morning on micros that I got kicked out of at $100, it was 2 micros from right here. That is currently worth $432. I got kicked out at 100 because of this candle wick right here. So I tried to save. I was at 100, like right here. Tried to be, be slick or whatever. It wicked me out on this candle to 95 and then came on down after that. But that's as far as backtesting goes for me. I live trade in the market to get my experience, win or lose, and then I go back and I journal it. So I have really good memory. So I just go back and I write down verbatim what happened with the day, what I did well, what I could change, what I could improve, and going forward what my goal is. So like today, yesterday, I was like August 12th, I'm at 992 or whatever. I ended the day, this is after the 992, I ended the day at 911. I traded probably too much. I'd like to make $10,000 a day. The market has hit an all-time high. It's at a stalemate currently. I believe that we're gonna hit 645 on SPY, 656, 640, 620, the highest level. Goal 1, make $1,000 with 1 mini. Didn't do that with 1 mini. I traded micros a day. Goal number 2, use 3 micros to get $3,000. And then goal number 4, after you hit the $4,000, you go to 4 minis. My scaling plan is written down in my journal as well. We do 1 mini up to $1,000. Once we get to $1,250, we'll go to 2 minis. Once we get to $2,250, we go to 3, and then so on and so forth until we hit the maximum amount for our account. We are 2 minutes away from 11 o'clock, so we're going to see if 11 o'clock continues this trend of pushing down, or if we're going to get a bit of a correction to the upside. But yeah, as far as backtesting goes, I don't do too much backtesting. I trade the market and I learn while I trade. And then I go back and I write it out, what went well and what went wrong. And then I commit those things to memory. And then I have a system in place. And then I follow the 5 P's for me, which everybody's 5 P's. Hey, plug that back up, sweetheart. Everybody's 5 P's are slightly different. Mine's are practice, practice, practice. It's actually just 1 P, it's practice. Practice helps you create a process. The process will help you with your patience. Your patience that's grown will help you with your psychology, and your psychology and all of those other 4 P's will lead to profitability. It took a long time for me to get to the point of patience, but that came with practice, and then that came from creating a process. And my process is solely only taking valid trades from valid support, valid resistance levels. You will never see me go live and hop in trades like this, or like what we're doing right now. Just jumping in just to jump in, I will do that when I'm making mistakes or I'm like spiraling out of control. I'll just be like marketing in and losing money. But on a regular basis, I form a level, I form a range. I can figure the range out pretty easily just glancing at it. And then I figure like, hey, this is a strong level of support. I'll put a blue line there. And then we'll go like, this is where I want to take my trade from. Go to right here at 50. That's where I want to take my trade from. It cuts down the middle of these 2 things right now. We're struggling with this 60 to 40. And we're about to be like 13 seconds away. We're going to go the 1 second time frame. 13 seconds away from the market going to 11 o'clock. And I want you guys to see what happens at 11 o'clock in 7 seconds. Watch these second candles change very drastically at the top of the hours. And I can trade this. I can take a trade here. And now it's 11 o'clock. Look at that. Hit resistance. Even the 1 minute 200 EMA is valid. But they're starting to trend it back the other way. Even the 1 minute 200 EMA is valid. I have whatever you have. And so if you're watching that for a second, you're like, oh, we're going back up. No, we're not. No, we're not. We're going to continue the trend. It's 11 o'clock. Look at that. Look at those second candles. That's a $5 move right there. This right here is $150 on 1 mini contract. And all you had to do is sit your trade right here. This right here is $300. Look at that. See what I mean? 1 second. Doesn't matter what chart you're looking at. It doesn't matter what time frame you look at. You understand the flow. You understand the flow of the stock market. That came from the initial, like you were saying, George, or I believe your name is Jeff on here, but back testing. Understanding that came from back testing. So $300 in like 8 seconds goes right back to the resistance area. And let's see where we go from there. That's how the story works for scalping. That is like real quick scalping. But you see the trend. The trend started here. Boop. Push right there, support. Came right here, lower high. Lower high. Support level right here at 50. I literally just drew that support level out a few seconds ago. So you see we went down to it, we bounced off of it, and that sends us back up higher. And then boom, break the 200 EMA. Try to break this resistance level right here. Doesn't matter what candles you look at. Don't trade 1 second if you're uncomfortable with it. But 1 second, 1 minute, whatever. I don't attack random points. I just sit my trades at levels. Levels, levels, levels. And then I get on the elevator. Look at that. Seconds. This is seconds. This is seconds. 350. Right there with 1 mini. And all you had to do was set your trade right here. And just leave it. It does all of this dancing from 11 o'clock. It's been 2 minutes now. All of this dancing. $350 right there. In like 18 seconds. Goes right back to your entry again. Or you probably took the $300. You add another contract. Take it right back down. Then it goes further. You break out here. You're trying to go to the next line, which is 40. And I'll go over here so I can show you the price without costing me anything. Go to NQ. So you set your trade up right here at 60. You see it breaking down to the downside. 1 mini contract. $550. Just like that. Seconds. You want 500? You want this right here? But from 60, setting your trade up right there to down here, you get your $300. Boom. Tap you out of that trade. You lock in or whatever. Let's say you locked in at like 200. You go back. It's going to tap you out. It's going to start to head down to like the 30s and stuff like that as we break down lower. And if you want $1,000 a day, you got to get all the way down here to 907. But all you have to do is sit at 60. Let the market come from down here to tap you in at 60 and then ride the trend on down. Second time frame, 1 minute time frame, 15 minute time frame, 5 minute time frame. All of this mess that you see, there's a method in it. All of these candle wicks, 5 minute time frame, doesn't matter. The 5 minute right there. Now notice something. When I clicked on the 5 minute, where's the 200 EMA? Right here. Notice that we are halfway to $1,000. And all you had to do is put your trade at 60. At the 500 EMAs, at the 200 EMA for the 5 minute. This candle wick has to be filled. There are rules in place. It has to be filled. I could have taken this trade very easily. I don't live trade like that with no minis. I don't want to change anything. I like explaining or whatever. Easy $500 trade. Going for the 1,000. Might even get to the 1,200 when we get all the way down there. The 1,000 is right here. All you had to do once we got below there and we were about to open up a new hour, go to the 60. It's about the beginning of the hour. Risking $300. If my finger would stop moving. You wouldn't even get up to your $300 risk. You'll see the candle wick right there, 1055. You ain't worried about that. You're worried about the 11. We're down to 500. We're trying to make it to 1,000. It can be that simple once you start to get that practice in. Look at that. All those seconds. We're way down here now. And people will ask, like, how? Dude, go to the 4-hour time frame and zoom out. The 4-hour time frame will tell you exactly what you need to know. We're trying to get to this top of this candle right here. All right, well, let's put a blue mark there. Let's see if we can make it down to the top of that candle. We're at the bottoms of these candles right here from the previous 4 hours. They're acting as support still. Then you go to a smaller time frame so you can see it and you can trade it. And I can place a little trade right there and it'll bounce off of that to like right here or right here. All from the 4-hour time frame. It's already there on the screen for you. All of these little other indicators and stuff, the 200 EMA, 90 EMA, etc. They're there as a visual aid, but you don't need any of this to trade. If you had nothing on your screen and you just glance at a chart, eventually your eyes will be trained to just see it. Have we filled the gap yet? Let me check on SPY real quick. Still got room to fill the gap, so we still got room to go down. We have a full $1 we can go down still. So once we break that 50 cent area for 643 and get into the 40s and 20s, this thing should start to rip off a little bit more. They're trying to hold it up, but really there's no reason to hold it up because you can just take it from down here back to the upside. So let it break on out, let it start selling off and stuff like that, and then, you know, take it from the gap being filled. But we have the gap filled. We're at 50%. We're over 50% of it now. You look at it. We went below 50. We hit 40s. We're gonna hit that next line now. Halfway to my next line. I'm not doing anything super duper complicated. I've just spent a lot of time on the 4-hour time frame studying how the market moves and the 1 minute time frame trading it. And then eventually the 1 second time frame. Because the more you look at the charts, the faster your eyes get. You know, you see Neo in the Matrix at first, and it's like all them little zeros and ones all over the screen. You're like, what the heck am I looking at? And then eventually you learn how to read the code. You see how close we are to that $1,000 though. That's what I want to see. See, there, broke out. We're gonna hit the 30s and then push even further. Go over here to NQ. Go the 5 minute 200 EMA. Put the one little contract right there, and we are how far from 1,000? So I would definitely be locked in here at $500 if I was trading this. We are currently hit 740 in the first 8 minutes of 11 o'clock. $740 before we hit support. Just hit support over here. So we're bouncing off of the support level right there. From these candles here, see it was resistance right here, it's support right there. $740. All you have to do is sit here and talk with me for 8 minutes and set your trade at 960. And to be honest, it should be 750 because we should be at 960. $750. 3/4 of the way to $1,000 trade. And once we break 40 cents over here on SPY, we will shoot down to that $1,000 mark. It's set in stone how it works, the rules of the market. Learn the rules. Learn what billionaires and millionaires need to do to move the market to a certain point, and learn to take advantage of that. You're as a retail trader. Hey, give me 1 second. As a trader, folks get caught up in trying to play every move of the market as it's going, right? And that's why so few people have great levels of success in the stock market, because everybody wants to just piggyback a ride. The ride started somewhere. The ride will end somewhere. As a trader in Davon's class or in Chris's class, find out where that ride starts and start taking the ride from the beginning. Be first in line. Don't wait for the all this consolidation and try to read from there and then take the second trade here, you know, and now we're above $870 over the course of 10 minutes. You know, take the ride from the beginning and you will start to understand that, hey, confirmation and everything is great. Buy side liquidity, sell side, buy structure, it's all that. Break a structure, change a character, all that is great. That's all great. If I didn't know any of that, could I still trade the market? Absolutely, because I don't know any of that. I have watched those videos a couple of times, but what I committed to memory is how the market was moving during the times where he was explaining. We are at 870 right now. 10 minutes. We're gonna hit 1,000. We're gonna hit 1,000. We're gonna hit 1,000 and react off that 1,000. Look at that reaction there. Next level, 935. Right below that candle wick. We need to get to the bottom of that candle wick. But 935 before we reacted. Go for the 1,000. You know, finish it off. And then you guys can go on up. Doesn't matter. You just... I think we make it so hard on ourselves because we believe it's hard. You know, first off, you come in here thinking that it's so hard. People told you don't trade and don't do this. You're gonna lose your money. Yeah, you're probably gonna lose your money at first, but if you stick it out, you're eventually gonna understand. You didn't come out of your mom's womb walking like a giraffe. You know, you learned. You took baby steps. You crawled. Some of us rolled around. I didn't roll. I pulled up on stuff pretty quickly, but some of us roll around. Some of us inch around. And then we get to pulling up on stuff. And then we push off of that stuff and we go to the next thing. It's a process. It's a gradual process. Your first focus should be learning the 4-hour time frame and how it works. Learning how to chart the 4-hour time frame. Another 8 cents and we will have $1,000 on our table right here. Even after that pullback. It's just enough practice gives you confidence. And you need to build your confidence. A lot of us lack confidence. I hear it all the time when I talk to people in this group. A lot of us lack confidence. I can sit and chill and make the money after I grew my confidence and my understanding. $1,000 right there, guys, and beyond. All you had to do is set your trade at 60 and just let it go. Is 12 minutes of your life worth $1,000? Can you give up 12 minutes of your life for $1,000? Can you give up 50 minutes, 30 minutes, an hour, 4 hours for $1,000? Everybody's goal when they get in here is to make $1,000. I just showed you how. Go in there, practice on the 4-hour time frame, learn where these level breaks are, learn about the S&P 500, why it's doing what it's doing right now, why we had the gap fill, why we keep pulling back to these, what are these random arbitrary levels that Sebastian drew on the screen? I had no data to go off of, didn't need it, and we're still hitting. Because in the past, we've done just this. So in the future, we're going to do just that. Again, it does not matter if you have no historical data to go off of. I know exactly what we should do based on prior historical rules that I have looked at and back tested thousands of times. And if in thousands of times you've had maybe 4 deviations or even 100 deviations, the mean is the rule. Whatever's the average is the rule. $1,000, guys. It's super simple. 5-minute 200 EMA to the support level down here at 910 or 915 will give you $1,000, and it's based off of this being the support over here. We just hit that, and now we went up. It never changes. We pulled back to support right here, took off from there. Hit support again, took off from there. We still got a gap fill all the way down to this area here. Let's see where the market started for you guys. Still got a gap fill. It has to fill gaps. You guys love to call them fair value gaps. I don't care what you call it. A gap is a gap is a gap is a gap to me. It's a hole in the stocks. We got to fill these holes. Okay, we got to cork this bad boy up. Slow or fast, no matter how it works, we got to fill it. And look, we went down to 43.50 and we bounced off 43.50. It's just how it works. Wick it out, form a true level, go to the next true level. 89, 642.89 is what they need to hit. And they will have filled the gaps. It's beautiful. I love the stock market because I have learned to make my paycheck every few days. My work, which I don't actually work that many hours to be fair, but my work paycheck, which I'm not there right now as you can tell, I can make it. This is 4 days of work. I'm at $2,500 in 4 days. That's 4 days of work, switching between micros and minis, a single mini. 4 days. Chase saw me get out of here at $100. It's worth over $600 now. 2 micros. That you don't need to put a lot of risk on the table. If you have
$200.
Yeah, if you have your
that level.
Sorry. If you have your thing set, so I was right here. Sell 2. Look at what it's worth now. $465, almost $500. 2 micros? That's awesome. I was risking $100, which put me like way up here for it to be wrong. Risking $100 puts me all the way back up there. The only reason I got out was actually I didn't get in there, Chase. I got in much higher. It's on video. Whatever. I got in right here because my 100 was like right here. Yeah. Yeah. She.
So that where you have the 200 EMA is basically where I took my micro trade.
Yeah.
I'm already up like
My dog. My dog. And we
370.
about to break the 643 right now. You about to be up another
Yeah,
$50.
liquidity grab right now.
Yeah, you're about to be up another $50. We're about to break this right here. Because you're going to go all the way to 89 cents, guys. We got to get to 89 cents. So once we break, we'll go to the 89 cents, and that'll be the full gap fill. We have almost fully filled this gap. Chase, how much you up?
I'm up 317.
317, so about 350, 370 right here. Yeah, that's simple. That's simple. We got to break this 10 cents or whatever to go to the next level. It's slow and it's arduous, but it's worth the money. Gain patience. That is the number one thing you need is patience. Risk management is going to give you the patience, but understanding will give you more patience than anything. Because what happened with me was I had lost so many times, like so many thousands of times, that I was like, okay, every time I do this, this happens. I literally will go back to my journal like, every time I do this, this happens? Then that must mean that every time we get to right here, this happens. So I'll just do the opposite of what I did. Every time we get down to the 20s, we get down to a single digit, and then go back up to the 20s and then break the single digits? Okay, cool. 40's the resistance area. We got to get down to 89 cents to fill the gap. All right, cool. Chase is up $315 and going. I hope you locked in at least 250, my boy.
I got stopped out with 250. I was basically trying to let it give it some room.
Yeah.
So it was working.
Hey, that's good though.
But
That's
got
250
250 though.
250 in an 8-minute conversation. That's great. You go to work for 8 hours at most jobs, you're not getting 250 for the day. And that's how you have to look at that day trading. If your job pays you $20 an hour and you work 8 hours, that's $160. Can you make $160 in a day? Hell yeah, you can make $160 in a few minutes. Get yourself to that point. You don't need to make $1,000 a day to survive. You're not gonna die if you don't make $1,000 a day. Your family's not gonna go hungry if you don't make $1,000 a day. If you can make $200 a day just to get yourself paid and to get yourself to a live trading account and average that for 30 days, you will have made $6,000. There are teachers who will never see $6,000 a month, and that is a sad fact. Substitute teachers are even worse. These people who mold our children's brains so that they can become the future day traders will never see what you can make in a day. And look at that pull up. We hit support like we're supposed to. Pull up. Still not done. Still not done gap filling, I don't believe. I think we still have like another 20 cents or something like that. But they're cool. They're cool to go from right here. And even that you can take to a quick little up play. Get you another few bucks or whatever the case is to 40. Just picking a range and sitting there. Pick a range, sit there, protect yourself to above the candle wicks. You need to be protected to above the manipulation, right? And then once you're protected, we should be going to the 9 EMA, so like 40 or whatever. Once you're protected to above the manipulation, your trade should be good. All the following candles, no matter how much up and down happens, should be good. You don't start locking in profit until you cross the lower candle wicks. Then you start locking in your profit. I lock in profit very fast, which is why I get kicked out a lot, but it's whatever. You know, as long as I keep making money, I'm straight. But let's say, or lowball myself. Let's say my week pays me $2,000. I've made my week in 4 days of trading. Micros, and I've gone as high as 5 micros, but I usually start with 2, and then I go to 4 when I see it's going really well. Then I'll pop a mini, and I'll get like $300, $400, or $500 from a mini. And then after I get that $300, $400, $500, I'll go back to micros to add to it. Shoot, Chase will tell you, I was down 300. No, I was down $500 yesterday. Ended the day up 911. When I got down 500, I took my trade at 8:30, gave me 1,200, which took me to 7, and then the rest of the day just adding with it with micros. I had made it up to $1,200. I I made it up to a positive $1,200, and then I took a bigger trade at later in the afternoon to see if I can get like to 2,000 or whatever, and I lost like 300, and then I just kept the 911 because the 911 is a cool score. You know, terrible day, but 911 is a cool number to call when you're pranking people as a kid. We should be making it like $9 more. Touch that 9 EMA. It's a little bit below $9, but you know, touch the 9 EMA. And that's where you meet resistance.
Nice little push up, hit a little resistance level, up $40.
Mm-hmm.
Just playing around with these micros. Scale down to 2.
$850 right there. That push. About to hit 1,000 at 40. Just broke 1,000. That was 2 minutes. Or 10 minutes. I'm sorry, 10 minutes. Just broke 1,000. And then came right back. After you broke 1,000, you lock in your 1,000, you get kicked out right after that. Went to 1,100. Off those 2 pushes right there. And that's just understanding levels. I say we make it to 40. We made it all the way up to 50, 49. We made it to 49. That's just understanding levels. It's that simple. I could sit here and do this with you guys all day long, every single time frame. 11:30, change the story. Heading for the rest.
Sebastian, what did we hit that is going up like this now? I'm up, but
support,
right?
Yeah, support.
All right, so
I'll take you over your spot. We were gap filling, right?
Yeah.
You hit support right here at 07. When we break this, when we initially broke on, I'll go to futures to show you it on futures. 15-minute time frame. Our initial push was right here. You see the bottom of this candle? This is support. So another like few dollars would have been support.
Oh, I see it. So all the way to the left. Gotcha.
Yeah. So look at, I'm gonna line it up for you right now. If I can get my mouse.
It's like it's an order block for,
right,
you know.
This right here. These 3 candles right
here.
Yep.
Exactly. Yep.
These 2 were the manipulation to the downside.
Mm-hmm.
Take off from there.
Gotcha.
But also, this little candle right here was what kicked it all off. The top of this candle wick is what kicks it all off. The top of that candle wick, this blue line, that red candle, all this area is support. We hit support, $1,000. You just place a mini. Now, inevitably, they're trying to draw down to this right here, the 15 minutes, which is 840. We made it to 890. But now we can go back up to resistance, which is right around here, and see what we can do from there. You can even get to the 23 EMA, as high as the 23 EMA, before you really hit the 24,000 again. But that's such a beautiful play. This day is already worth like $3,000. $3,500 this day, one contract. You just got a third of it a minute ago. And let's look at the 1 minute, because I don't believe it was like, yeah, it didn't take a full 10 minutes. It took 1, 2, 3, 4, 5, 6 minutes, really. But you're on the 15-minute time frame, so it looks like a 15-minute candle, but really it took 6 minutes. Hit support, stop flat on that red candle. Next blue candle pops off, and then you just ride the trend back up. And you see you see a switch from the downtrend right here. Once you break that 9 EMA and that 23, you start the uptrend and you start reaching for this area right here of 978, 979. And if you don't market enter and guess, you will be just fine in the market to sustain days and days and days of losses off of like one winning day. If you piggyback or jump in or, you know, double dutch your way into the market every single day, you're going to lose a lot of money and you're going to lose fast. Like from right here, I could jump in, market, take a quick little trade to the downside, see if I can get like a few bucks. But no, you want very solid moves like this. And you want very solid moves like this from this support line right here. Taking it up. If you missed that initial one, like say you want change of character and all that stuff, fine, you get it right here, you take the trade from right there. I prefer taking my trade from the beginning.
I did it right as soon as we hit that little current high. The blue candle to the left.
Yeah.
I'm up like $70 right now, so it's adding on to that 250.
Yeah, I mean, and waiting is valid. Waiting's fine. I'm not saying there's anything wrong with waiting, guys. I'm just saying that I don't
Yeah,
wait. I find the initial levels.
TP is
Yeah,
TP is set exactly where you pointed at. Like if we hit for I think your 200 EMA, go to your 15 minute.
yeah.
So, but I just got stopped off, so it's cool. Cool with that.
But you up what? 370, 350?
Yeah, I'm up like
That's great.
facts. And that was only in a matter of minutes. I'm
How
up
many
like
micros? You two?
320. I did 5 for the first, and then I did 2. So and then I only risked like $100 of it. So
So this is support. This is resistance. This is support down here as well. We should be break. If we come back down, we'll break this support level. And this is the next level of support right here. And you got to think when he asks the question of why, it's a very valid question because there's a smaller candle in there that triggers it, but people stack orders here. So literally, this becomes a block of orders, which sends us back north. People will stack orders at these levels, so you can't push through there. You know, I'm a millionaire, billionaire. I need to make, $1 million a trade. I need to make 500,000 on my trade. What's the best possible level? You know what? We pull back down to here. I'm just gonna set a bunch of orders there, and then they'll start buying once we hit that level. So they sold from up here, they selling. They set their next order to start buying from down there. Retailers jump on, which is why you see it be such a slow push down. Retailers jump in and start trying to piggyback it down, riding is pulling back and stuff like that. And then the millionaires and billionaires are just sitting right here chilling. And I trade as if I was a millionaire or billionaire already. I trade every single trade that I take. No, that's a lie. Every trade that I take that's good, I trade as if I'm a billionaire. And I got $5 million on the line every take. Where is the safest place for me to stash my trade? Where it might violate a little bit and go down, but I won't lose the trade and I'll end up in money. And then once I get there, it should react pretty quickly. Is the question that I ask myself. And then I just start analyzing. Okay, you're looking at all this stuff right here. You start analyzing, and then very quickly I'll just draw a range. That's the range. That's simple. Look to the left, bam. Body of the candle is the actual level. This is the manipulation. So I look to protect myself above the manipulation. So if I gotta go with a single mini or less, then I'll take a single mini or less. If I gotta go to micros to make sure that I'm protected above that, then I'll go to micros to make sure I'm protected at $10. $250 should put me just above this. Yeah, so $250 would have been enough. That's too close. That's too close. I'll just go to micros. Or if I take that mini trade and I believe that it's going to hold firm, then I'll just take the trade and risk the 250. You got to be okay with losing that 250 though. You got to be cool with losing it. But we're in the range right now. We're falling into a common range, which this is the top half of the range. This is the bottom half of the range. And we're doing 50% right now. Got up to 40, wicked up to 49, which right there, look at that, is the resistance. So we wicked up to the 49. And now we're pushing back down. They want to go lower. They need to go lower. I don't know if they want to fill the body of the candle to 42. 42 is a great place for the market to go. But all this stuff is drawn before the market's even created levels. I just understand based off of historical data where we normally hit. And then once we actually form the 4-hour candles and stuff, I'll just make the adjustment to where it's supposed to be. But we'll come back and we'll do the same exact thing. Anybody else make any money out here? I see somebody made $300 in the chat. Somebody's all the way up. Newbie. This dealer, Seavaz, Doshi. Mind of a Goldfish, Nikki. Everybody, hello. How we doing? Hope we're good. Hope we're good today. Name's just H on there. It's just H. Adele.
Hey, what's up, Nick? I didn't know Nick was in here. Hey, Adele. Who's Mind of a Goldfish? That's a cool name.
Right. So they ain't got no attention span. And this is a real cash account. I don't play around with that paper stuff. You know, you gotta the make your focus running it like it was a Fortune 500 company, not a business. You know, people go businesses go under all the time. Run your trading as if you're running a Fortune 500 company. Make the best possible decisions for you. You know, if you're uncomfortable trading the style that I trade, don't. There are 10,000 ways to skin this cat. Trade however you trade. Just realize that what I'm showing you is that it's simple. Once you understand, it's not simple in the beginning. It wasn't like this always, but now I can click a button and I can make the money that I'm looking to make for the most part. Just with a very moderate to simple understanding. I am going to add to this level right here, my next blue line. So as we start to form these new days and stuff like that, I will go ahead and draw my new chart out and just add to where the things are on the 4-hour time frame. This 20 is going to be super important later. The next expected level to hit is going to be 80, and then we're going to hit 98. Hey, bunny, what you want to play? Grounded? Well, I'm doing a video thing right now. I'll come and get you in a couple of minutes, okay? All right. You want to say hi? Oh, you gotta put the headphones on so you can hear. Say good morning, everybody.
Good morning, everybody.
Say make some money.
Good morning.
Hello, morning.
Say make some money.
Make some money.
Good morning.
Be silly. Say hi.
Hi.
All right, go on. I'll be down in a minute.
Bye-bye.
Get out of here in a minute. Play some grounded with my baby. Do I want to go for $1,000 today? Of course, but the market's slow, and I don't like slow. We're right back to the resistance here. Let's see if we can break out there. Go to the next resistance line, which is a 41. What's up, baby? You can bring your computer chair in here. Got me a little gamer junior here. Yeah, but fall in love. If you don't love it, you know, and what it can do for you, don't let it take advantage of you. You know, don't piggyback in because things are going well unless it's 8:30 in the morning and it's about to go for like $200,000. Then, you know, jump in on those. Those are the, like, windfall trading is like the only time where you'll see me market in for the most part. It's gotta really be going though. You know, but I would say, in my opinion, windfall trading is ill-advised. What I tend to do is go from a level prior to the windfall, and then if I'm wrong, you know, it'll cost me a little bit, and if I'm right, I'm in the windfall already. You know when windfalls are coming. 8:30 in the morning, 9:30 in the morning, 10 o'clock in the morning, 1 o'clock in the afternoon, 1:19 in the afternoon, 3:50 in the afternoon. You know when windfalls are going to happen for the most part. 6 o'clock at night if it's a really, really, really big type of moving day. You know, don't target them, but understand that they do happen and they affect your trading. News trades, same thing. 1 o'clock in the afternoon, 2 o'clock in the afternoon, news days are going to pop like crazy. Here goes some upcoming news. We have PPI, which is the jobs claims, to see how many job firings and everything you have. Industrial production, that's the car dealerships up north, see how they're doing. Retail sales, see how the overall is doing. And then we don't have what's going on Friday? What's today? Wednesday? Oh, it's Wednesday. I thought it was Thursday. So Friday we get another jobs report. Still weak at the resistance area. Look at that 4-hour candle though, that's a beauty. But even more so, look at this bad boy right here. Good googly moogly. That was such a day. That right there, that's a day right there. That is how you make. Like, no matter how many mistakes you made in this day, you had an opportunity like 80 times to clear up whatever mistake you made and make some money yesterday. As long as you don't lock yourself out of your account. You know, take advantage of all of your risk settings. My risk. Whoa. Forgot about that earlier, Chase. My risk settings are always set in stone. They start at 150 every now and again. If I'm doing 2 contracts, I'll move this. Basically, I just add another 150 per contract. That's me. Don't copy that. That's only $7 for the most part. That's unless you're doing micros. That's very hard to manage. That is a very, very, very tight window. $7. We're going $7 a minute right now. So don't do that one. $250 to $500 is a really good risk area. If you're on a 50K account and you're trying to pass a 50K account, then start with, you know, if you have to do a mini because you're just dead set on doing minis, start with 250. You know, if you can't find an area that validates $250 of loss, then you have another problem and you need to just be trading micros. And that's no offense to anyone who needs to trade micros. Trading micros, as CVAS has shown you guys, can make you $700, $800, $900, $1,000 a day just trading micros. I just like to get it faster, so that's why I trade minis. You don't have to do any aggressive trading to get a lot of money. I use my example as minis, and the $1,000 day is what everybody wanted to get coming in here, so that's why I keep showing y'all that. But micros makes a lot of money. Chase just made $370 off micros. You know, and your leverage goes a lot further with micros. If you risking $200 a day with micros, it's gonna take you forever to lose that trade, not to win. Usually, if you're in the right direction, it's gonna go pretty quick. But if you're wrong, your drawdown of $200, $250, right there, versus this. Like if you can blow the whole 250, and then at any point in time that you see you're down like 100 or whatever, you just cancel the trade. Just lose the 100, save yourself $150. But you still could have made $500. Still could have made 500 off of just, you wanted confirmation, so you waited for that next candle to open up on the pullback or whatever. You get it right there. You still make $500. You just have to wait longer. You gotta wait about an hour and a half. Just put yourself at the support line right here for your take profit. You know, I go a little bit inside of it to make sure that I get it, because a lot of times what happens is when we hit support, you see what we did earlier, you hit support and it pops off real hard, and sometimes your trade won't open, especially if you have multiple contracts open. It won't sell, so it has to go through your trade to sell, and it has to sit there for like a second. So if we just touch real quick and pop back the other way, it may not sell. So a lot of times I won't try to get the full amount. I'll try to get something within the actual trading range. So for me, I would be at like 450 in this particular type of a trade, because I want to be at the bodies of these candles right here. So 434 is good enough. You can make that other $70 up some other time. It's funny, we went from being up like $80 to being down like $7 now, because the market is starting to normalize and pull back in all of these different trades. As you can see, Meta's running the day right now. And Meta is having a little bit of a struggle. Apple is finally pulling back because Apple had to be, fall in line with the rest of other people. Tesla was up like $8. They're pulling back. Everything's starting to pull back except for a good old AMD. For you guys out there doing AMD, AMD did their pulling back earlier. SPX for my option traders, another super duper, man. You can make so much money. Now listen, you can lose a ton of money on SPX really fast. But SPX multipliers are stupid good. Like, you can take $50 in SPX and take it into $1,000 in like 12 minutes with like one SPX contract. A single SPX contract can make you a killing. This would have been a phenomenal SPX trade. AVGO is Broadcom. They're another one of the biggest companies in the country. They recently had their stock split a few months back, so they're down to $300. During their stock split, they were way down. this out. This was them at their stock split. They were at 141. That's how crazy it is. They were cooling, chilling. Talk about a stock split, hit the stock split, hit the floor in the stock split. I drew this up months ago. And they have gone $200 darn near in just a few months. These big companies they're gonna be there. Walmart did their little split back then as well. They're back where they were. They haven't got back to the high, but they're back where they were. What we got going on? We got some notifications going. We're breaking higher. Okay. All right. That's about it, man. I hope you guys have enjoyed it, man. I hope you guys have picked something up. Like, listen, I'm not the best at this.
Yes, sir.
My style is my style.
Thank you.
That's just it. Like, all I do is what y'all see, man. You're welcome.
Very much appreciated.
Yeah, but do you guys have any questions?
Yeah,
for me?
appreciate
I do the last 15 minutes Q&A before we get out of here. Y'all got anything you want to know? I'll answer what I can. Oh, I got this.
I have a
this
question.
set up here. What is your question?
I have a question.
Yes.
Okay, so I know you were saying like 830, 930, 1031, 119, 350. Like, how will we approach those? How will we approach those times, like with trading? Like, what would be a good way to try to take advantage of, those spikes or whatever?
Give me 1 second and I will show you exactly that.
Okay.
I just thought. All right, we're back. So I will post it from the phone in a little bit, though. All right, so we're gonna go and take away all of this stuff, removing the drawings. That's if we ever hit this high right there, we'll have a nice reaction off of that. So I got that set up already. I want to be able to see at all times what's going on with SPY. All right. Alright, man, listen. You guys use this and you mess yourself up, you didn't use it right. But I'm going to show you guys how it works.
We got you, Sebastian. You put your full disclaimer out there. Can't nobody blame you, brother.
Don't blame me. You be like, I lost 15. No, man. I'm just showing you how it works now. Alright, so you go to your timer. You're going to type in 1530. I mean, not 1530, 830. 8:30 in the morning. There's also one in yesterday. Go to. It's take a couple seconds. It's gonna load, right? Now, how do you approach this? It's super duper simple. From this zone right here, this matters. Okay, you draw out this to this. Right? That's the range that the market is currently in. If you're pushing here, you know you want to push past this, and you're pulling back to that, you go back in time, you start to see that everything was below this, so that's your support area, right? You need to enter your trade either here as we're breaking through the support area, but you have to take your trade from the support. So if I'm seeing like we're hitting 60 a lot, and we're going down to about 58, I will protect myself to 50. A $10 range. $10 will give me the ability for this candle to wick down all the way through all of this and still be safe, right? So I'm protecting to right here. Now you have your 3 layers of protection. It doesn't matter what direction this is about to happen in, but you have your 3 layers of protection. Your entry has to be on the line of the support. It cannot be in the middle. It cannot be at the top, because the market is going to sharply pull back right before 8:30, and then it's going to blow the hell up. So here we are, consolidating, start going up. You get in right here, you're wrong. Pulls back $7, $8, you would have been kicked out of that play. Okay? That next second, here we are. 8:29.59 will tell you exactly what's about to happen. We were consolidating, doing all that consolidation. 8:29.59 say, yo, we're about to go. 8:30, 8:31, 8:32, 3, 4. You're gonna need a pullback right there, which is usually gonna kick me out of a play, because I'm usually like, as soon as we jump, I trail immediately. Like, I throw my thing up there so quick and lock in some profits. So as soon as we hit like $500, I'm like locked in. I made it to like 1200, and then it pulled back right here, and this red candle got me out, and then went the next several seconds like way higher. But one contract right at the support, because if you're in at support, it should protect you from the trade. This goes for every single time frame where we have windfalls. This goes for 8:30. This goes for 10 a.m. This goes for 9:30 in the morning. It goes for 3:50. You need to know, not think. You need to know where your support and resistance is, and what direction the market is about to move in is based off of the current trend. Okay, the market was trending up all night long. It was trending up. All of this was pushing up, pushing up, pushing up. Okay, we hit the support area, and then if you go back even further on like the 5-minute time frame, you can see that we had pushed up from way down there back to the 1 second. We'll do this on, we'll go to the 1 minute even. You have to see it on the 1 second because the 1 second is exactly what's happening. Now we'll go to the 1 minute so you can see what it looks like on the minute. We have all this consolidation for about an hour worth of minute-long consolidations. But we have the 200 EMA right here. We get above it, and then we have that high. That high becomes your new level because the high is at the resistance. So now this is the support. It was resistance. It's now support. You have to get in at your support levels. So your support levels need to be accurate. Resistance, 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 resistance. All of these were resistance. Now support, right? So then you're like, okay, cool. I'm going to take it from support. So support says 60. Notice how, remember that trade that I told Chase to take? It was at 60, right? It was at 960. Notice how on another day, 60 going up is the other way. We're always hitting 60s. We're always hitting 80s. We're always hitting these 20s on this particular stock. But you just sit at that, let it play out. It's going up, it's going down. I know you get nervous as it's going in there or whatever. You know, it's been about a few minutes, and then 8:30 hits, and boom. It goes from 660 to 760 in 9 seconds. It's a 1 minute candle, but it took 9 seconds to go $100. And then even after that, like let's say you missed that 1 minute or whatever, you want to wait for it to settle. Okay, cool. Go down to what? 720 as the pullback area and take it from 720. The 9 EMA, where the 9 EMA is trending up from right here, so it's a little space. Too far down there at 710. 720 is the level that you want to hit. 720 wicks out a little bit, take it from there. You get the next several minutes of taking it up to the upside. Because it's very rare, it does happen sometimes, but it's very rare that you're going to go up on those massive jumps and pull all the way back down. Those are more rare occasions. The thing that happens more commonly is you'll get a pullback to a previous support, and then you'll go from there. And if you don't have a previous support, then you're going to get a pullback of about $40 or whatever. Basically, like close to like almost half of the move, third to half of the move, and then a continuation. But look at that. On the 1 second again. Doesn't matter if you're on the 1 second, the 1 minute, the 5 minute. You need to know the level for it because it happens all the time. We're gonna go to a different day too. Let's go to another day. Let's go to Monday because I think we had a good one Monday as well. Come on. Not have a good one Monday. Was it the previous week? Let's try Friday. No, I think it was Thursday. It was one of the days that it shouldn't have happened. Let's try Thursday of last week. When was the news last week? Was it Thursday?
Sebastian, you know what's crazy?
What?
You called it yesterday. He was like, "Yo, wait till Wednesday. Wednesday is going to be crazy."
Oh, I told you, yeah. I was like, we're not done. Yeah, I was like, bro, we're about to
Oh
pop
yeah, I
up.
told you, yeah.
Like crazy. Yeah, we were not done.
Facts. I once I knew we were breaking above 6442, I was like, oh yeah. So if we hit that and it's a wrap. We're growing even further. And I should have kept it because I probably would have been up like, this eval I'm trying to pass probably would have been like halfway there already.
Load it. Reload the day.
There's a whole sidewalk, I swear.
Trying to get the darn day to load. It won't load the day.
Gary, did you trade today?
Ah, here it is. It was Thursday. Look at this.
Not really.
Look
A little
at
bit.
this.
Something
Okay.
real small like $1 in profit.
Okay. Ain't nothing wrong with that, brother.
Yeah, simple.
This, my friends, is why I tell you, understand the levels. Look at that 1 second candle. Look at that 1 second candle. So same exact thing as before. Follow your trend. We're trending down. You're gonna pull back to the resistance or support area. So you get in, same exact area. This is an easy one right here. It's 600. It's 600. You get in at 600 there. You can ride it the full 5 minutes, and then just boom, have your take profit set down here at the 80 or whatever the case is, but it's 600. You're gonna pull back to 600 one more time, a second later, and then you're gonna go right back down there, and then inevitably end up going up. 2 seconds, all the money you need, and that's why you don't do it, because in that same 2 seconds, the market corrected itself and started going back the other way. So the several seconds afterwards, you don't have the chance for it. But if you're here already, and let's say you're looking for your $1,000 and you're here at the resistance line, you can ride it until 8:30, and then it will trigger your $1,000 super duper fast. I'm gonna go to the other day where it happened. Here is the 8th. Same thing. We've been trending down. We started to pull back. We pull back to the resistance line right here. You take it. It's a smaller play, but same thing. Wednesday of the prior week, on a day where we had like some FOMC news. I think it was like last month on like the 17th. Let's go to an FOMC day. Those are important days. Either the 17th or the 24th. But you see, 8:30 tells you what's gonna happen. We pull it down, we finish the rocket back up. Same thing for the rest of the day. Now, I'll do the 350 as well in a second here, because I've been wanting to show Nick for a minute. Nick be missing out on that 350 play. I think my computer screen's frozen. I don't know if it'll let me go back that far. Yep, I figured it was unresponsive. Alright, now we're gonna do 350. Yesterday, 1550. For those of you who don't know the military times. So right here, 350, we go up, we pull it down. What do we do today? We go up, we pull it down. Start going up after that, trending back into the trend higher. That's from way back. Let's do it yesterday. This is July. Same thing as yesterday. We started to pop up, then we pulled it on back down. All right, this one right here. Prior day shows you the entire man. 350 will show you the entire market's play. $350. We have this massive pull down, then we have this massive push up, and then later on we pull it down again, and then we push up again. 1:30 in the morning. So not only did you get this like multiple times yesterday after the 350, it did it in the middle of the night as well, where we put down, made the N shape, and went back up. So pull it down, pull it up, went back down, and then popped off. So then you get an even higher one over here at 8:30. You get the massive jump, massive pull down, massive jump, and all that shows you off of all that shows you what happens off of the 3:50 p.m. the prior day. Massive pull down, pull up, start to do that whole little end thing there, pull it down, pull up, like literally over and over again. Okay, giant candle wick, pull up, massive pull up, massive pull down, massive pull up, breakout, showing you exactly what the market wishes to do the next day. But it's that consolidation, and you can see it in this little range right here. And then it just depends on what level you're at when the trade is about to take off. If the market is already trending up, it showed you that earlier, it put down already, so it's trending up. All you need to do is protect to this area right here. The next level is right there at the 200 EMA, which was like cutting between it right there as a strong level of support. Protect yourself to that strong level of support. Take your trade from there, and you can get in about 5 minutes, 15 minutes, 20 minutes ahead, doesn't matter. You see the 10 o'clock, we put on down there to that same support area, took off from there. Now you're taking it from the top, the high of day. They showed you the high of day right here. When you get that breaker structure, if you want to wait for 11 o'clock gave you a brilliant play from the change of character and the break of structure to take it on. It was a much longer, much slower play, but much safer play. All the rest of the day, to the end of the day, all you gotta do is take it at 11 o'clock. Just ride the little trend on up all slow and then let it close you out automatically. But I like this. This is awesome and fun for me. That's what I like. That's what I like. Let's see if I can find something from yesterday. And I'll give you another play or whatever, right from the support level. They don't blame me with, bro, I got mini over here. I got micros over here. Bro, I just recorded a masterpiece. I could have sworn I recorded it. Apparently I didn't record it. So many trades I ran just now. I'll show you in a minute. Because I sent Chase a message at 8:30 in the morning telling him that I just recorded that. Apparently not. Apparently I never recorded it. Alright, well, whatever. We're good. You know, but the general understanding of what just happened with that 8:30 play, what happens in 8:30 plays.
Yes.
It happens
Thank
the same
you.
with it happens the same to the downside as well, so be aware of that. But majority of downside selling off happens at after 9:30 and 10 o'clock. So you'll get most of your massive falls after 9:30, and then you'll get your big jumps at the the 8:30 and stuff like that. Here's one day where we had a nice little decent fall at 8 o'clock and stuff. But majority of your big moves come after the 9:30. This is a good day right here. See, 10 o'clock, big old push down. 9:30 finishes the push to the upside, and you're just looking at trying to get to the high of day and stuff like that. Get to the high of day, wick it out, get back to the original high of day that was set at 9, and then take the ride on down. 200 EMA right here, boom. Look at that bounce every single time. Even though it's going to break out, you get a bounce every single time. So you can sell there, you can take it back the other way, or you can try to hold out for more. You can try to hold out for more, or you can take it there. Oh, but look at that. Isn't that crazy? Oh my gosh. 360. 360 GZ. So weird that 360 is so beloved, or the 60s are so loved. 60, 60, 60, manipulation. Boom, 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 boom. They love it. They have stalemated, and they ain't doing nothing. Let's see if they sneak some stuff into the lunch hour, though. That'd be cool. That's it for me, gang. You know, it gets easier. Be patient with yourself. Off rip, nobody's making, unless you're really lucky. Like I was for my first couple trades, I was super lucky. I made $2,500. My second couple of trades, I lost $2,500. That's luck. When the skill comes in, you'll feel calm come over you, and that may take a few years for you to get that calm to come over you. When you have the skill and it's just you got it, you just know now. That's calm, and then from there it's just polishing. Prior to that, it's a frantic race to understand what the hell is going on while making money, hopefully. And you got to give yourself some grace. So to give yourself some grace and lose gracefully, use smaller contracts. Use smaller stop losses. If your stop loss is giving you heart palpitations, you're doing it wrong. If every time you lose it's like, and you feel like that, you're doing too much. That's way too much of a loss. If every time it's a sweat fest and you get that invisible sweat under your armpits and you're screaming at the computer and you're wishing and praying and doing like the little monkey gesture, you're blowing at the computer screen for it to go back up, you're doing it wrong. Your risk is way too high. You need to minimize the risk but have a reasonable risk. So if you're risking 250 and you don't want to get stopped out immediately, trade 4 micros. You'll make a lot of money with those with a much smaller risk level and a much wider room for you to make a mistake. If you're not as accurate at reading the charts right now or studying the 4 hour time frame, you can't really understand how it's working and what the hell do all these lines that he has on the screen mean. You can't understand all that. That's fine. Use smaller contracts. Use a smaller amount. If you're doing a $150,000 account, you can do a mini. If you're doing a $100,000 account, you can do a mini. But once you lose $500, you need to go to micros to get that back. God darn it! I'm gonna have to draw this all over again, aren't I? I hate when it saves the changes. I gotta draw my whole chart up again. It's so much I like you guys. I gotta draw another chart. It's fine. I find that fun and cathartic. But yeah, if you're trading and it feels like super stressful and you're beating yourself over the head because you've lost $1,000, $2,000, $8,000, $60,000, slow down, take a step back, use a journal. I use my journal every morning, and then I'm gonna put y'all up on game that I put Chase on. There's a book called The 5 a.m. Club. Check out that book. I'll give you the principles of it. The principles of it is that you wake up at 5 o'clock in the morning. That hour between 5 and 6 is crucial. It's one of the most peaceful times of the day. I can confirm that 100%. The world is asleep. You're on your own, your element. I work out for about 20 minutes. I meditate for about 20 minutes. And my meditation is just thanking the Lord for what he's given me so far and hoping that he's going to bless me going forward so that I can bless the people of his world. That's my whole meditation for 20 minutes. And then I just be talking to myself about what my goal is for the day. I suck at meditating. I can namaste and all that stuff. I don't like it. It's so boring. I set a timer on my Alexa so my Alexa can break me out of it. And then like it'll feel like 20 minutes. I'll be like, Alexa, how much time is left? 17 minutes. I'm like, oh, Jesus, 17 more minutes of sitting here? I loathe it. But it's necessary to clear my mind and get in the right space to trade the next day. I didn't have a process before, and I was just kind of gun-ho and doing whatever, staying up late at night and doing, trading. That was a learning process. Now that I've learned, I have a process. I get up at 5. I do a quick workout. I don't care if it's 100 push-ups, 100 squats. Not all together. I'm saying those are different days. Tuesday and Thursday, those are leg days. 100 push-ups every day or whatever. Then I sit on a pillow cushion and I just think about the prior day. I thank God for if I made some money. I thank God for if I lost some money, but I'm still in the game. Like if I lose $2,200 of my $3,000 thing, I still got $800 to work with, Lord. And I know for a fact we can work this out. We can make it back to where it was because we've done it before. I've made it back from $50 to thousands. I've made it back from getting down to my account being at $50 with micros to growing it back to thousands. So it doesn't matter if you lose money. Take a deep breath, step back from it, and then write it down. Like, what did I do wrong? Was I in a panic? Was I spiraling? Were the kids distracting me? Was I driving and I shouldn't have been trading on my phone? Did I fat finger and click the wrong button thinking that I was trading micros and I was trading 5 minis? Whatever the case is, as long as you have money in your account, you're still in the game. So I don't care if you lose almost all of it. As long as you don't lose all of it, you're still in the game. One thing to do is protect that account with your life when you go fund it, though, because when you go fund it and you lose a funded account, it's not only discouraging, I feel like it makes it harder to get that next eval done. Because you feel like you did something wrong on your funded account, which is real money. And now this is play money. You're like, well, what the hell was I doing before that I could pass this so easy? And I failed the funded account. So when you fail an account, take an account back and start going over your trades, because everything has a orders thing or whatever where you can go over your orders and look back over your orders and see what you did. Go through that. Use that as a journal thing too, and really protect these accounts. You'll see me go down $500. That's because I understand how to make $500 without risking more than $150. If you the norm of what I want to be down starting my day is about $90 to $150. I don't want to be down more than my average stop loss when I start a day, because it's an added stress that I don't need. I need to be focused solely on where to take my next trade. Not, hey, if I take my next trade here and I'm not right and I lose now another 150, now I'm down 300. I need to know, hey, either be up, be down a couple of bucks and be like, cool, smooth. If I'm down and I lose the $150 trade, I'm down 250. I'm done for the day. Okay, if I'm down and I'm done for the day and I see something good, no, when I lose like $500, I'm like doing 3 contracts or 4 contracts or whatever the case is. You got to risk like $600, and I usually stop those before they lose the full amount. And just pace yourself. You know, it's not. My barber gave me the perfect analogy the other day, because I told him, I was like, yeah, I was up 5K this week, man, and I hadn't got to the end of the story yet. And he was like, cool, you take profit? I was like, man, you know me. Hell no. I blew that account. And he was like, bro, what? I was like, dude, listen, I don't know what happened today, okay? But I was in a trade. I woke up down 600 because I did 2 single contracts or whatever, limit orders. And when you do 2, both of your orders are separate orders, but it says you have 2 contracts. So I woke up down 600, which threw off my psyche. And instead of backing away from the day, I went into defense and I started trading and trading and trading. And then by the time I got to the warehouse, I was down like 1,500. And I was like, you know what? I'm going to take $2,000 profit. So I'll get up to 4K. So I got to like 36, and then I took another loss, so it got me down to like 3,000. I was like, you know what? I got 150 to play with. I'm gonna do one more trade. If I fall below 3,000, I'll just take the 1,500. But I fell really quickly below 3,000 to like $86. So then I tried to trade to get that little $86 back, and it just didn't work out. When I lost like $200, I started spiraling, and I was like, nah, I gotta go $200, now $800, now $900, and now I'm like, I got $1,500 left in the account. I'm putting all 15 contracts on this next trade, and we're gonna get it back. And I didn't get it back. I lost that account immediately. And then I sat there because my heart was racing out of control. And this is with all of these years of experience, being paid out multiple times and having some very high accounts right now, I still freak out. So it doesn't fully go away, and you use the process to alleviate that, and you use rules to alleviate that. So once that happened and I saw that I could still do that, I went and I wrote down the rules. I said, okay, we're going to trade less. We're going to win more. We're going to protect smaller. And when I lose a trade, I'll take an hour away if it's a bad loss. And then I'll spend that hour either doing nothing, or I'll go back after that hour and I'll look at the market. And if it has good market conditions, we'll take another trade. If we lose that trade, we're just done. That's it. Done. You eat losses all the time. Haven't ate a loss so far this week, or this week since last week. But you eat losses all the time in day trading. You have to get used to it. You have to get used to it. If you're losing big and you start to freak and you're up, especially like another thing, right now I got $2,500, right? Before I would start to get annoyed by it is losing $500. But at the end of the day, I really have $4,500 to lose. And that is one thing that you have to understand. So when you get to $5,000, that cash that's in there is all you. $4,500, everything is yours in that account. I lost all my money. And that stuck with me for about 2 weeks. I didn't stop thinking about it or talking about it for about 2 weeks. It was a monumental loss because it was a failure to get money and put money in my family's pocket. I had $2,500 sitting on the table that morning. By that afternoon, that $2,500 was gone, plus the rest of it. I will never do that again. I swear on everything. I will never lose like that again. I will lose for sure. I have some bad days for sure, but I will never lose like that again. We are struggling with this 940 right now, which is beautiful for traders. Get you a little 940 to 920 action and below. What time is it? 12:19, 12:20. Oh, we should be breaking down here a little bit, going down to fill that gap. Grace, have humility, be humble. I don't care how good you get. The market can always kick your ass. Be humble. If you believe in a higher power, thank your higher power, whatever you believe in. If you believe in the universe, thank the damn universe for everything that you get out of this market, because everybody outside of this place right now is losing. While Donald and his friends are making billions of dollars, there are people losing their houses over this. Don't be one of those people. Be in the top 1%. I want to be in the top 0.0000001%, but be in the 1%. Be in that top 3%. Right now, I'm in about the top 5%. I feel good about it. I'm making money. I'm cool. Every week, I'm averaging about $2,100 or whatever. To hit that next level, you got to really plot it out. Every day, my goal is $10,000. Do I hit? No. But even if I hit $1,000, that's awesome. That's 10% of my goal. I set my goal at 10,000, and when I finally hit 10,000, my goal is going to be 100,000 in a day. It's always going to go up. Always be pushing yourself to that next level. Don't settle for good enough. Don't settle for this is okay. If that's who you want to be, then fine. I don't fault you for that. But you can do better than okay. You can do better than $100 a day, $50 a day. It's much easier than that. If you're trading 2 micros and you're making $100, you can trade 2 micros and make $200 or $400 with more time and more patience and more understanding. I really should have been in this trade. What I'm talking to y'all for? I could be making this money right now. There's $40 off the board right there. But give yourself time to learn, and when you start to feel comfortable, don't get comfortable. As soon as you start to feel comfortable, push yourself a little bit. See how good you really are. You've been doing 2 micros this whole time? Do 4. You've been doing 4 this whole time? Do 8. You doing 8? Just put a mini on the board. Don't be crazy like Nick and do 10. Put a mini on the board. You've been doing a mini this whole time? Now you're up to 2. Let's see what we can really do. You got the same risk parameter set, but let's see what we can really do. Because if you can make 50K in half a year, you're good. You're like, your house payments are done, your car payments are done, your bills are paid, you're on a vacation now. If you make 30K in a year, same thing. This is beautiful. This is beautiful. Just selling off. Going over here filling this gap. Come on down. Come on down to the price is right. We need about 40 more cents. But look at that. Look at that. Look how smooth it is to just make money doing futures. Options, I don't like Greeks. Because I would have been in this play probably at 9 o'clock. If I was still in this play, I'd probably be down some money, even though I was up in the right direction. I don't like Greeks. I like futures. But that's not to say that scalping and day trading is for everybody. Some of you guys are really good at swing trading. Stick to swing trading options, because you can lose just as fast as I'm able to teach you how to make money. You could be losing these trades as well. These trades switch very quickly. The trends change extra fast. We were going up, we were coming down. You would think they were going back up. They tricked you. They're going down. And then you think we're coming down further. Nope, they're going back up. It's swing highs and lows non-stop in futures, and I love that. But if you don't feel comfortable with that, trade swing trades. Swing trades make so much money. Go to the 4-hour time frame and be like, yo, listen, I only need a play a month where I can go in with like 10 contracts, right? Go to 4-hour time frame. You go in 10 contracts on this day when it hits the 4-hour 200 EMA, and then you get out over here when it breaks the high, and you've made stupid money that took me a bunch of days doing single trades to do. You can do the same numbers with less trades, swing trading. Same thing right here. We came down to this one. It was, I think this is the 1-hour 200 EMA this particular day. Came down to the 1-hour 200 EMA, swing trades. Came up to resistance, swing trade. Came down to the support, 200 EMA, swing trade. Come down to support again, swing trade. Save yourself the headache. And it is a headache. It's a headache trading like I trade. But I find it exhilarating and fun at the same time, so I like it. I love it. But I'm not trading anymore. I'm analyzing, and I'm placing orders. When you're analyzing and you're going 100% off of your analytics, the gambling is gone. When you wait hours and hours and hours for something that you anticipate will happen, not think or guess will happen, it's different. We've been waiting 3 hours now, guys, for us to just fill the gap. But I wouldn't trade again until it filled the gap. We've gone up, we've had some nice little middle of the road movement up and down and stuff like that, but waiting patiently pays you so much more. You waited for it to hit the high and fall off of that high, massive play to the downside. Wait for it to hit 960 over here on our trade, massive play to the downside. Wait for it to go back to 940, massive play on the downside. Then turns around, goes back up. But there's a lot to it, more than just knowing some terminology or learning from Davon. You got to put in the time and get the experience. You have to get live fire experiences. You don't learn how to fight just shadowboxing or watching other people fight. You got to get punched in the face a few times. It sucks. Your eyes get all teary when you get hit in the nose, but you learn to keep your damn hands up after that. The market is no different. Nothing you want in life is going to just be automatically awesome at it. When you rode your bike, you were a little wobbly at first. You had training wheels on there. Then your dad or mom took one training wheel off for both in my case. And then they were like, go. I didn't even let my daughter have training wheels. That's just who I am as a teacher. I was like, I'm going to show you. Because she wasn't doing good with training wheels on. So I just took them both off. I said, we're going to just learn how to ride with no training wheels. I got her and her little friend together. And you guys saw the video where I took them to learn how to ride. That was her first time ever learning how to ride 2 wheels. They're good now. Now she wants to ask me every day to take her. But you got to get the experience. She had to fall down for her to know that the ground's really not that hard. And you're not falling that far. You got to lose trades. You have to lose trades to get your accuracy up. You got to get out of the guessing. And you got to take big losses if you want to eventually win big, because you got to know what the difference feels like. If you sit here, you be like, oh, I lost $5, I lost $50, I lost $75, I lost $50 every day until your account busts. Yeah, that's great. You know, it took you 80 days to lose the account, but you still lost the account. You got to put 250 on the board, 500 on the board. You got to know what that risk feels like. You got to know as that drawdown comes that, ooh, I want to cancel this so bad. Ooh, please, Lord, take it back the other way. Oh, get me back in profit, Lord. Just do it for me this one time. I promise I won't mess up again. You're going to for sure mess up again, though. But you be making them promises to the Lord. He know you. He know you going to mess up again next week. Doing the same thing. And he going to have to bail you out once again. But it's part of day trading. It's the job. It's the thing that we like to do, that we chose to do. It's the thing that we paid all this money for. It's all part of day trading. Go get hit in the mouth. And then when you get hit in the mouth, step back and be like, you know, why I get hit in the mouth today? The market was kind of pooling right there. It was the consolidation. I figured I could ride out of the consolidation, take a good trade. I was wrong and pull it down a little bit further and then react it from an area of support. Let me just take, or let's, in this particular case right here, we pulled down into the fair value gap and we wicked up a little bit, and I thought that we were going to have a bounce and pull it back up, but we didn't. The fair value gap was just the bus coming back to push us down even further, so I lost that trade. Okay. You know, next time, keep with the trend. The trend is your friend. Trend line right there. We pull back to the trend line right there. Ride the trend on down. We broke the 23 EMA. You know it's going to go down a little bit further. Until we get back to that 9, we're not going to go back up. Because we're really not going up. We're really just sitting here. Pushing back down, coming back to 940. Pushing back down, coming back to 940. 944 is a very strong area of resistance. We're just below it. Because people like even numbers. So you got a bunch of people with orders sitting at 940, pushing the market back down. Gets down here to 910, pushing the market back up. But inevitably, we got to break down and come on and fill this gap. Had a good run. We had a great run, and we're going to have an even better run once we fill the gap. But retail traders are fickle things. They like just doing whatever. Don't be a retail trader. Don't even consider yourself a retail trader. You're a day trader as a whole. You analyze, you execute, you make money. It's that simple. You analyze, you execute, you lose money. You reanalyze, you execute, you do better, you make more money than you would have made the last time. You play around, you gamble, you lose a bunch of money, You start the process all over again. You analyze, you execute, you make money. Now it's less because you're digging your way out of a hole. You get out of that hole and you don't put the shovel back up to dig more. When you're losing, when you're digging a hole for yourself, the first way out is to put the shovel down. You guys all know this. I have lost everything more times than I can count and more times than I care to count. I'm still here, doing better than ever. I have improved my skills every single year by 10 times more of what I was the prior year. First year, you're losing $30,000. Next year, you're gaining money. The next year, you're positive on that. So now you're at break even, and everything from now on is straight profit. So it's straight profit from here on. And the patience came with a bunch of practice. A bunch of getting it wrong. Just a whole bunch of times of trying to catch these candle wicks. Trying to jump in on the candle wick. It's pulling back. Oh. You know what I'm saying? This is right here. Okay.
Order filled.
All right. Look at it. Look at it real quick. Okay. All right. We're going down. Just jump in right there. Okay. All right. We're going to go right here. Oh, no. It's going back the other way. Oh, no. Go down. That right there is why you lose. You're trying to catch a move. Don't catch a move. Be the move. Be the reason that the market's going. We'll leave that at $60 for now. When you try to piggyback, this happens every time. Don't try to pace the market. Figure out where the levels are. Take it from the level. Don't trade the middle. Don't diddle in the middle. You're going to lose majority of your trades. If I was risking a single mini contract, this is a $100 trade already. I'm down $95. I'm down $130. I have now blown this trade trying to guess. But because it's a single micro, it's cool. I can sit in it. I can see what happens. What time is it? It's 12:30. 12:30 is usually a time where we turn around and start going back the other way. So we need to either break this thing down so I can get my couple of dollars real quick, or keep it pushing. But you see how easy it is to fail your trades. $25 is $250 with a mini contract. We're wavering somewhere between $130 and $50 negative right now. And that's when the hoping and praying starts. That's when you're like, oh man, I sure hope this goes down. Lord, if you could just make this go down, that would be great. And it doesn't. It just doesn't go down. You choose bad areas. You're trying to market jump into like some craziness instead of just waiting for it to get to an area of support or resistance. If I take a trade from this little top of this candle or this green line right here, I'm up $69. That's $170 right there. $190, $200 that you just lost. $220 that you just lost on one mini contract. Almost to $250. $25 is $250. This is the lesson right here. This is day trading. If you guess, you will pay for it. And then I'm gonna do what people do when they wrong already.
Order filled.
They compound it. Because they figure when it goes down, now I'm gonna get double. So now you're down 280. And it's still going up. Now you're risking double. Then it gets worse. They get to $300. Guess what they do again?
Order filled.
They compound it. Hoping and praying that it goes down. It's still going up. They do it again.
Order filled.
They compound it. It's still going up. Oh my God, one more time.
Order filled.
They compound it. And then finally they're right. And they go lock in profit. But guess what? It doesn't always work out that way. It doesn't always work out that way. Sometimes you're just wrong. But now we're at $450. We feel good about that and everything. You can fix a problem. But you shouldn't trade like that. Notice before we finally added contracts, because I added contracts from resistance basically. Once we added contracts at 420, at 920, it starts to move back the other way. But if you're in one mini, you can't afford to go 4 minis. You can't afford to go negative $400. I'm teaching you this off of a micro contract, and that's fine. That's the martingale system. Do not martingale trade. You will be so broke in such a small amount of time trying to martingale That is a blackjack technique. I love it in blackjack. It's awesome. It works. It does not work in day trading because you don't have limitless amounts of money behind you. In blackjack, I go to the table with 10 grand and I'm like, I can lose 5 of this. So I can martingale until I'm down 5 G's. But by that time, I've won enough hands to get me up on the casino and I can back out. Doesn't work like that in day trading. The more contracts you add, the faster those numbers go negative. You saw us jump from 1 to 2, 2 to 380, 380 to 4, and before we finally got back to 2 positive. Practice your entries. Stress the 4-hour time frame. Stress points of interest on the 4-hour time frame. On the 4-hour time frame, they're saying you should enter right here, or you should enter right here. Those are the 2 places where you want to have an entry. Put your single contract there. It pushes down to this one right there. It's a $15 move. You push down here, it's even more. Now, if I'm using SPY over here, I'm noticing that SPY is trending up, so I'm not taking trades to the downside. I start getting in the uptrend, ride the uptrend, because once SPY goes past 60 cents, it should start to escalate pretty quickly. You know, if we're not going to gap fill, the least we can do is start going up. It is 12:36. Got another 24 minutes, and then you'll be at the 1 o'clock, and the 1 o'clock should finish off the rest of this move. But 1 o'clock starts the next story, what we're going to do for the next 2 hours. But y'all see how easy it is to lose money and how easy it is to gain it back for sure. But how easy it is to lose money just guessing. No preparation, no analytics, no analysis. I'm just going to go because the market says we're going down right now. So I'm going to click down. Market enter. Oh snap, down $150. You start shaking because your stop loss is quick at 250. Which you would have hit with a single contract by now. It takes nothing to lose with minis. It takes a lot more to lose with micros. Even with all those micros I put on there, it was only like $180. That's cool. I'm still up almost $300 if I lose that trade. Of course, you don't want to lose it, but I'm still up. And you see what happens if you enter at the resistance line? It resists. You get money. Do what you're supposed to do based off of the 4-hour time frame. It's even without all of what you're learning, even without knowing the buy side liquidity, sell side liquidity, the change of character, the breakup structure, the Fibonacci, even without all of that, you can make a few bucks just using your 4-hour time frame. Use the skills that Davon teaches you to refine that market structure understanding. Use those market structure goal building videos to refine that understanding. But with just the 4-hour time frame, you should be able to go out there tomorrow and make $100, $200. With just this minuscule understanding that, hey, I should probably take a trade right here to the downside. I should probably take a trade right here to the downside. Let's go to the 1 second time frame. Look at that. All you had to do is be at resistance. Resistance is right here. Boom. Get below resistance. Nice little trades. It won't go past that resistance area. It's still being resisted. Still pushing lower. Now you can market enter near resistance, by the way. Break resistance. You go to the next resistance level. Next resistance level is right here. Go back in time. All of these are below it. The resistance started right there. Push down to this resistance, which was support right here. Bounced up, broke it out, and that's where we're at currently. You just need for that basic, with futures, I should say, especially not so much with options. You need a little bit more time and movement, but with futures, you should be able to make $100 off of 2 micros from just these moves. $50 of movement is all you need to make $200 with 2 micros. $25 of movement is all you need to make it with with the 2. Make 100. Boop. Look at that. Resistance, 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 resistance. Pushing down off the resistance. 200 EMA coming to confirm what you thought, that this is resistance. 1 o'clock coming to break this market wide open. You got to keep it super simple. You got to use the KISS acronym. You got to keep it super simple. Learn all you can. Get all the knowledge so that when things happen that are outside of the norm, you'll understand why it's happening. These little things right here, you'll understand what the news does and how it affects and stuff like that. You know, this already happened. It caused a little push to the upside, but it didn't do much. See, Trump makes an announcement. Didn't have a high impact at all. Didn't do anything. Market's still coming down. Went right back to resistance. That's all it did. It was give us enough of a push to resistance, and then inevitably break it out a little bit and then pull it on back down. We are trending down. And then when you start making money and you start adding more contracts and you start going in with 5, 10, 15 contracts or whatever, it gets fun. It gets fun. It's really fun to see your money go from $0 to $1,500 in like several seconds. My opinion on contracts is that most people shouldn't go above 5 minis. The minimum you can risk with 5 minis is $750. The average you should risk with 5 minis is $1,500, meaning that you need to have at least $5,000 in your account to even start thinking about fives. Or in other words, the $4,500 that they require you to trade your $150,000 account. But 5 is such a good number because 5 you can risk $1,000 and you can make like $4,000 pretty easily. $5,000 pretty easily. 5 mini contracts is my favorite amount of minis. It's what I do the most. I average 3 minis when I'm trading minis. I usually start with 1 when I'm doing a new account. But here's 5 mini contracts, right? You're risking $750. Let's check the box, Type in risk, downside, $750, which is 30 ticks. And you're looking for, let's say, 5K, which is 200 ticks. That's it. 5 mini contracts. Now, to cover yourself, like I said, you're going to need a lot of money or whatever. 1,500 is the average of what you should be risking, which will put you about right there at 60. But it's nothing to get 5K with 5 mini contracts. Now, if you want to do this and make more but lose less, click that, and type in 3. Now, that protects you above this, and you have all of this space to get to 5K, which you're still going to inevitably get to. Same thing when you're taking a trade that bounces from the downside, right here. You know, and eventually you'll get there where you're risking $1,500 a play and stuff like that, and it doesn't bother you as much. But we pretty much go on the 5K. 3 contracts never really gets to 5. It has to go to like the next number, which is an odd amount. It's like 50-10. You know, but just that move from where Chase took his play, worth $2,000 for 3 contracts. Push up to right there, worth $3,400 with 3 contracts. I love 3 contracts here. 3 contracts is how I made $3,600 with 0 drawdown. Best single trade for 2 hours and 55 minutes. My best trading day is, my best single trade is like 10K or 12K or something like that. But my best single trade where I set it and forget it was 3,600. That was a game changer for me. When I realized that I didn't have to watch the market and I could make money, I was like, oh snap, we cooking with grease. I literally, from that day on, I've been setting up trades all over my chart and just leaving them with reasonable take profits. I put like $500 in. I have like 80 trades set up. I don't care how many times those things trade, because now I'm not trading or over trading. The market is trading. And if I lose, I lose. And if I win, awesome. And majority of the time, I will win. And I became so happy with the fact that I could lose the stress, because when I watch, I feel under pressure to get it locked in. But when I don't watch, I have no idea what's going on, but I have faith that what I chose was correct. What I analyzed was correct. God got me, as they say. Okay, I'm gonna make some money here. I put the work in. I deserve to get paid for putting the work in. So if $500 is the goal or whatever, I should be able to get $500 out of there. Now with 3 contracts, I'm gonna reach for $1,500 to start, and I'm gonna risk about $500. It's really 450, but I'll just put on 500. 450 is 30 ticks, so it puts me below the line. We get below there, I figure I'm wrong, and we're pulling down towards this, and I'll eat the loss. $1,500 is pretty easy to get out of that range there, and then I'll go from there. The $3,600 that I put in there was right here, and this happens a lot, as you can see. This pull down and that pull up, $3,600 happens a lot. How many ticks is that? Let's go to ticks. It was 250 ticks. And I think I took 245 of it. Right there. So I was looking for 250 ticks. I took 245 to guarantee that I got it, and I got it. And all I was risking was this, 450 bucks. I sat myself down at the bottom of a trade. It hit, didn't go negative, and ran right to where I was. And it went crazy, like past where I was too. When I woke up, I think it was worth like 15K when I finally woke up the next morning. I get up like 2 minutes after it closed out. And then it ran for like another hour and a half. And the market goes on runs like that at certain times of the day. 1 o'clock in the morning, we usually go on a nice run. 2 o'clock in the morning, we'll go on a nice run. 3 o'clock, we'll get a nice little run or reversal. 4 o'clock is when the London session really picks up and starts to like transition towards the NYSE, New York Stock Exchange Open. And then 4:30, everything shifts over to what it's going to be for the NYSE for the rest of the day. 6 o'clock, they've been sneaking a lot of good moves in there, but 7 o'clock for sure gives you great moves. Y'all already know what 8:30 does. Look at that. Look at that. Look at that gap fill. NQ's behind. We just filled the gap. Just filled the gap and bounce. NQ's behind. Let's see what QQQ looks like. Oh, QQQ been filled its gap. So QQQ's cool. So technically we're ahead. Now we're just going down to the support area right here. But we're not done pushing down. They wanna take up all this little space right here. As we should. All is right with the trading world, people. This is how the market should work. Learn the flow of the market. There is an absolute flow to the market. I know where we're starting in the day. I know where the goal of the day is, just based off of the fact that the market tends to move in $5 increments. We'll manipulate $1 or so more, but I hit up Chase this morning. I'm like, yo, we're gonna hit 645, and we'll manipulate over that or whatever. You see the manipulation over 645, but look where we came back down to. You manipulated at 646. Come on back down to 645, 50, whatever the case is. Move on down from there. Once you get even, you're leaving. And it will get so much easier. I promise you. Just focus on the flow of the market, and you need to spend that 30 minutes, preferably an hour a day while it's live. And that's where, for people who trade options, that's where futures comes in, because you can still learn from futures even though you're not trading futures. You can still learn how the market flows while you're not trading futures, because what's going to happen is it directly impacts how your stock is going to react the next day. All of the running up that we saw last night, you guys saw as a pop today, pushing us up to a new height and then falling back down to recover all of that gap that we formed. These gaps cannot stay in there. Even if you feel it like they did right here, where they don't go all the way down, that's because of this level right here already being set before the gap up. So they had already put down that area, which allowed them to pop and stay at this height. But when we do come back down, we'll come down and we'll fill that, like you see right here on the 200 EMA for the 15. So then you start drawing the next level. And you're like, what's the next point of interest? The next point of interest is for 642 or 641.95. And that's the next point of interest that they want to go to. So I either look to take a trade off there or look to ride the rest of the wave down if that's the trend that we're going to continue. We have 12 minutes before 1 o'clock. But you get comfortable with taking a little loss and you'll make more money. Once you become a good loser, you'll make a lot of money. Because a good loser isn't trying to lose. They're protecting themselves against losing, but they are okay with it going negative. I see it go negative all the time now, and I'm like, cool. How much negative we gonna go before we go my way? That just goes to show me that my entry was off a little bit. But if I'm taking trades and I'm risking $7 and I'm losing 5 of that $7 before I get a massive move, it grows my confidence. I'm like, dang, A few more dollars and I would have been on point. Chase and Dave, I tell you, like I send them so many pictures and stuff and texts of like damn near hitting a trade. Like it literally coming within like 25 cents of a trade, blowing up into this massive trade in my direction and me not getting anything out of it. And I don't chase it because you have to have that self-control not to chase your play. If the dog is running away, you just let him run. He know where he lives. He'll find his way home. And if the market comes all the way back from like a big move, I move my trade to a higher point because we're going to break my initial trade and go to a higher point. 80 cents the next bounce area. We're at 84 right now. Where's the body of this candle? What is that? 65? What's crazy is these 10 little cents or whatever that's moving down on the S&P. That's big money in micros and what you call it? Big money for us. It's $30 for us and going down. 80 cents the next bounce area. We just hit 80 cents. Oh, we're going to break all the fill gap. Fill the gap. Beautiful. We fill the gap. We have filled the gap, and now we have the lower at 642 that we can go to. So we bounce to 65. Head on back up a little bit. And then you have this little piece right here that you can fill. But the market can go all the way back down here if it wanted to. 639, 640. But right now, we fill the gap, and they get to decide now, which is why they do it, what's going to happen at 1 o'clock. Do we complete reverse, going back up? Or do we finish pushing on down and fill some more of this gap over here? But y'all have a lovely day. I have talked plenty long. This is a 2 hour and 58 minute video.